Upgrade now and get over 45 commercial-free music stations.
Television. Here's Francine Lacroix.
I'm delighted to be joined right here in Davos by the Chief Executive of Standard Life Aberdeen. He's Keith Skeoch. Thank you so much for joining us, braving the cold, to coming to talk about investment markets and also what we're expecting for 2020. We had quite a ride when it came to equity markets in 2019. Can we continue on this path, or is this now the return to active funds?
I think in the short run, despite all the noise about trade, I think it looks okay. We found out last year where the top for interest rates are, arguably where the bottom for earnings is. So I think there's a bit of momentum behind markets, and that will continue. I'm clearly biased, but I think active funds are really important, and as well as the sort of normal active versus passive debate.
So what does it mean for Aberdeen? Are you changing your, have you exercised the different voting rights?
We have been running, we've integrated ESG into our investment process. And we've been doing ESG since 1993. So we're a long-term player. What we have done this year is we've made sure that we take due account of climate change, of global warming, integrated that into our investment process.
Hear more interviews like this one on Bloomberg Television, streaming live on Bloomberg.com and on the Bloomberg mobile app, or check your local cable listings. Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. 6:17 on Wall Street. Bloomberg Daybreak is out on customer terminals, bringing you all the news you need to start your day. Let's get a check at the latest headlines with Hannah George at the Bloomberg Daybreak desk. Good morning, Hannah.
Good morning, Karen. China is expanding its travel ban. After yesterday's travel restrictions in Wuhan, the New York Times says nearby cities are also imposing restrictions. Crude is under mounting pressure from the China virus and rising supply. According to Vanda Insights, the fear of a pandemic cutting demand is real. Christine Lagarde fires the starting gun on the ECB strategic review today. Sources say officials are planning a two-part approach that breaks out inflation targeting. And shares of PG&E are higher after getting bondholders to back its $46 billion restructuring plan. Now the utility needs to get California Governor Gavin Newsom on board. For the news you need to start your day, check out Daybreak on your mobile phone on the Bloomberg Anywhere app. Karen.
All right, Hannah, thank you. S&P futures, little change this morning. Dow futures down 26. NASDAQ futures up 6. The DAX in Germany's down 0.33%. 10-year Treasury up 6/32, yield 1.74%, and the yield on the 2-year 1.51%. NYMEX crude oil is down 1.7% or 95 cents at $55.79 a barrel. COMEX gold down 0.2% or $3.30 at $15.53.30 an ounce. The euro is at 1.1088 against the dollar. British pound 1.3123. And the yen at 109.60. That's a Bloomberg Business Flash. Now here's Michael Barr with more on what's going on around the world. Michael.
Karen, the Senate impeachment trial will resume this afternoon. In opening arguments yesterday, Democrats say President Trump led a conspiracy that headed towards his impeachment. The president's attorney, Jay Sekulow, insists the president did nothing wrong. The president's team will make their arguments Saturday. 3 American crew members have died when a C-130 Hercules aerial water tanker crashed while battling wildfires in southeastern Australia. The tragedy brings the death toll from the blazes to at least 31 since September. New York Giants quarterback Eli Manning has retired. The Giants said that Manning, who led the team to 2 Super Bowls, would formally announce his retirement tomorrow. In the NBA, the Knicks lost along with the Wizards and Warriors. The Celtics won. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg, Nathan.
Okay, thank you, Michael. It's almost 6:20 now on Wall Street. Live from the Bloomberg Interactive Brokers studios, this is Bloomberg Daybreak. And in less than an hour and a half, we get the latest policy decision from the European Central Bank. Ahead of that, we bring in Bloomberg's senior Euro area economist, David Powell, for a preview. Good morning, David. I think it would probably be a surprise to end all surprises if we actually get a rate move from the ECB this morning, right? This is more about the strategic policy review from President Lagarde, is it not?
That's right. The likelihood of a changed monetary policy is close to zero. If you look at the economic situation in the euro area, it's largely unchanged from the last time the Governing Council met on the 12th of December, and that goes for the kind of broad GDP outlook, as well as the inflation outlook. So they have the luxury of essentially not having to focus too much on the economics, the near-term economics of the bloc and of monetary policy changes in order to begin this soul-searching exercise and to really hash out a detailed outline of what this strategic review will contain.
So what kind of details are you going to be looking for from President Lagarde this morning?
Well, we're probably going to have a list of topics that we'll include. We've actually already had some of those topics, so probably a bit more detail. And so President Lagarde, in testimony in the European Parliament in the beginning of December, and also at her last press conference in mid-December, kind of mentioned some topics, just climate change and looking at the inflation target. But we'll probably get some more specifics, kind of the exact questions they'll be trying to answer. It's expected that they will question whether their inflation target should be changed. Right now, it is below but close to 2%. In all likelihood, at the end of the strategic review, which won't be completed for 1 year, that will probably change smallly to 2% itself. They'll look at the symmetry of it, so whether when inflation is lower than it should be, if that should in the future be offset by higher rates of inflation. And there does seem to be a fair amount of support for focusing on symmetry. And they also look at how do we measure inflation? Is CPI really what we want to look at? And they said they'll look at inflation expectations. There are lots of measures of that. Some of them show different things at different times. And that'll be the first part of it, kind of looking at inflation, the inflation target, and also how monetary policy is used to achieve that target. Was buying bonds effective? Was negative rates effective? And that's kind of the normal stuff that you would expect if a central bank were to do this. And then there'll be a second section that will have kind of secondary goals. And we already know from a lot about what Christine Lagarde has said to the European Parliament, focus on the topic of climate change. Is there anything the ECB can do in order to further the goals of the European Union when it comes to climate change, such as buying assets in its quantitative easing program or its pension fund that are climate friendly, and various other things? That's going to be a bit more controversial because there are some members of the governing council, particularly members from Germany, for example, who take a more conservative approach to central banking, and they say, we definitely should be tackling climate change, but not the ECB. That's something for elected politicians to do. It's not in our mandate. So that'll be the kind of in the secondary part.
Right. Of course, climate change has been a central focus of the World Economic Forum in Davos, and President Trump was there. He had a lot to say about European trade during his time on the slopes. Do you expect any commentary on that from the ECB this morning?
Well, the ECB always has some commentary about trade because trade has had a major negative impact on the euro area economy. But they're normally very vague. They say there are downside risks linked to protectionism. They don't ever really go into kind of naming specific kind of trade issues or individual politicians or anything that's going on like that. But we have had some improvement. So we have created a measure of uncertainty. It's actually a replica of a measure the ECB has, and that measures uncertainty in the economy linked to trade uncertainty about kind of what the impact of these trade wars will do. And that has come down essentially because a mid-November deadline that President Trump had set for considering tariffs on European autos has passed. And we also now have had word that Trump has agreed with the French president not to have any more tariffs for the end of the year. So trade developments are positive for the ECB right now.
All right, Bloomberg senior euro area economist David Powell, thanks for the preview of the European Central Bank decision coming up at 1:45 in Frankfurt. That is 7:45 Wall Street time, a little less than an hour and a half from now, followed by Lagarde's news conference at 8:30. Full coverage here on Bloomberg Radio.
This is a Bloomberg Money Minute.
TripAdvisor is cutting hundreds of jobs amid increasing competition from Google, which has launched new travel tools of its own. TripAdvisor is eliminating about 200 workers. The company had just over 3,800 at the end of September. FedEx is ramping up e-commerce services for large retailers, offering later pickup deadlines and speeding up deliveries. The move could potentially give FedEx a lift and help retailers gain a competitive advantage over Amazon. To boost volumes, FedEx also plans to take back about 2 million packages a day handled by the U.S. Postal Service. Disney is selling the Fox Next Games unit to startup Scopely, offloading a video game business that it acquired in its takeover of 21st Century Fox last year. Fox Next is best known for its Marvel Strike Force game. Stock futures little changed after kind of a flat day yesterday on Wall Street, amid lingering concerns that a virus spreading from China to other countries could weigh on global economic growth. Gina Cervetti, Bloomberg Radio.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
Elite Advisory.
Welcome to Nuffield Health Battersea, a gym built around you. You get regular health MOTs to create a plan that works for you, with physios and personal trainers on site. You'll find a wide range of equipment and classes, and our expert team will support you to get the most out of your health, fitness, and your membership. Join today to get the rest of the month free. Search Nuffield Health. Specialists in you. 12-month commitments only. Facilities stated are in most gyms. Visit nuffieldhealth.com/terms.
Chilly January days in London are tough enough without a broken boiler. Keep your home warm and working this winter with 2 years interest-free credit and your boiler installed by one of our expert engineers. Plus, you'll get a 5-year British Gas warranty. And we can even quote by video call after work or on weekends. Get a quote by the 29th of February, and you can also get £200 off a new boiler, or £400 off for our existing home care customers. Search British Gas New Boiler. Conditions apply.
A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Along the goal line, Martin scores! It takes it home!
Hockey fans, the 2019-20 NHL season is here.
Here's Pietrangelo, he scores!
And you can hear the action live on TuneIn Premium.
A move, and a shot, they score!
From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
Upgrade today.
Want to hear about the latest and greatest things to listen to on TuneIn? For reminders of the biggest live sports games, debates, and breaking news stories, follow @TuneIn on Facebook, Twitter, and Instagram to stay connected with the audio that matters to you.
Pascal gobbles up the rebound and slams it down.
Catch your favorite NBA team right here on TuneIn.
A step back, deep three is up and in.
Search NBA on TuneIn and hear all the action. The NBA lives on TuneIn.
You might already know that TuneIn allows you to listen to all the pro sports leagues wherever you go. But did you know TuneIn is also home to the wide world of college sports?
Open three, DeAndre Hunter got it! Handoff Carruthers, big hole right side. He leaps and he surges in, touchdown!
From live college football, basketball, and baseball games to podcasts and coaches shows fueling your love for the game in your school. And the best part is, it's all free. Search college sports to find your team or league.
Bloomberg Interactive Broker Studio in New York. Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Daybreak.
It's 6:30 on Wall Street. Good morning. I'm Nathan Hager.
And I'm Karen Moscow. We are just about 3 hours away from the opening of U.S. trading. Let's get you up to date on the news you need to know at this hour. Global stocks are lower, with Asia leading declines as concern over the new virus in China spread. Officials are halting travel from Wuhan, the epicenter of the virus. And we get the very latest from Bloomberg's Selena Wang in Beijing.
Outbound flights and railway has been banned, as well as public transportation in the city. You have worldwide governments on high alert right now, and China has a nationwide screening program, but hundreds of millions of people are traveling around this time period for Chinese New Year, which is tomorrow. So it makes screening and monitoring even more difficult. And add to that the fact that we've learned that some of the people who have died did not exhibit a fever. So that means the ability to catch this is quite difficult.
On the last trading day before China's Lunar New Year holiday, the Shanghai Composite plunged 2.7%. That's the biggest drop for that day in its 3-decade history.
And the deadly virus is also having an impact on the oil market, with crude extending declines this morning. Bloomberg's Steven Stapczynski has more from Singapore.
When you look at what happened during the SARS epidemic, you saw air travel drop about 8% in Asia. That had a knock-on effect and lowered Brent and aviation crudes. Because less people are traveling, you'll see less of a demand boost. So because of that, that's going to sap prices globally, but also focused in Asia when you look at jet fuel indexes.
And checking crude now, it's down 1.3% to $62.39 a barrel, while West Texas Intermediate oil is down 1.5% at $55.87.
On the monetary policy front, the European Central Bank announces its latest decision just over 1 hour from now, and that's followed by a news conference by President Christine Lagarde.
The UK is a step closer to leaving the European Union. Parliament has approved Prime Minister Boris Johnson's Brexit deal. It now goes to the Queen for her signature.
And index funds are drawing antitrust scrutiny for their influence over mergers. Bloomberg News has learned U.S. regulators are probing the influence that large shareholders like BlackRock and Vanguard have over the companies in which they invest. Now let's get you up to date on how stocks are faring. We check the markets every 15 minutes throughout the trading day on Bloomberg. S&P futures are little change this morning. Dow futures down 23. NASDAQ futures up about 7. The DAX in Germany is down 0.3%. 10-year Treasury up 7/30 seconds. Yield 1.74%, and the yield on the 2-year 1.50%. NYMEX crude oil is down 1.6% or 90 cents at $55.84 a barrel. COMEX gold is down 0.2% or $3.20 at $15.5350 an ounce. And the euro at 1.1093 against the dollar. Straight ahead, we have the latest world and national news, and this is Bloomberg.
All right, thanks, Karen. It's 6:33 on Wall Street, and this news update is brought to you by Land Rover. Life's an adventure. Experience it in the new Land Rover Discovery Sport. Visit your tri-state area Land Rover retailer for details on the new Discovery Sport. Land Rover, above and beyond. Now, here's Michael Barr.
Thank you, Nathan. House Democrats have wrapped up a day of arguments in President Trump's impeachment trial, appealing to skeptical Republican senators to join them in voting to oust Trump from office to, quote now, protect our democracy. Senate Minority Leader Chuck Schumer says that the voices of the American public will help bring the case further into the Senate, including potential witnesses.
Some of the Republican members feel the heat. They put pressure on McConnell, and that's how some of these things will change. The big one is witnesses and documents, and we'll see.
Republican Senator Ted Cruz told reporters President Obama didn't give military aid to Ukraine and could have also faced impeachment.
You know, there's an old saying that hypocrisy is the tribute vice pays to virtue.
President Trump is blasting the proceedings, calling the Democrats corrupt. Secretary of State Mike Pompeo said the U.S. is committed to supporting Ukraine and stamping out corruption in the country.
Our policy with respect to Ukraine has been set on the fundamental principles of reducing the footprint of corruption and helping the Ukrainian people build up a democracy while under threat from the Russians in the east and southeast.
Pompeo also told Bloomberg TV he denies that President Trump's personal lawyer, Rudy Giuliani, oversaw a shadow foreign policy toward Ukraine. 3 firefighters were killed when a Hercules aerial water tanker crashed while on a firebombing mission in the snowy Monaro region of New South Wales in Australia. Officials say the crew members on board were U.S. residents who had come to fight the bushfires in the region. Rural Fire Service Commissioner Shane Fitzsimmons says the plane had been fighting dry and windy conditions near the site of the crash.
Tragically, there appears to be no survivors as a result of the crash down in the snowy Monero area. It's impacted heavily with the ground, and initial reports are that there was a large fireball associated with the impact of the plane as it hit the ground.
The days of passengers bringing rabbits, turtles, and birds on planes as emotional support animals could be ending. The Department of Transportation proposed that only specially trained dogs qualify as service animals. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg, Nathan.
All right, Michael, thank you. Coming up to 6:36 on Wall Street, time for the Bloomberg NBC Sports Update. Here's John Stashower.
Nathan, Eli Manning was drafted by San Diego. Didn't want to play there. Orchestrated a trade to New York, and midway through his rookie season, he became the Giants' starting quarterback. Except for getting benched one game a couple years ago, it's a job he held for 16 years until the Giants turned to rookie Daniel Jones this past season. Eli said, didn't much like being a backup, so he has made it official. He will retire as a Giant. We'll see if he gets to the Hall of Fame. Manning is 7th all-time in passing yards and touchdowns, won 2 Super Bowl MVPs, but with all the losing lately, his regular season record was only 500, and Eli never won a playoff game other than in the 2 Super Bowl seasons. The Mets considered Luis Rojas to be their manager a few months ago. Instead went with Carlos Beltran, whose involvement in the Astros scandal forced him out. So the Mets are finalizing a deal with Rojas, who's part of a famous baseball family. His father, Felipe Alou, his 2 uncles, Matty and Jesus, his brother Moises, all played in the majors. His name is Rojas, not Alou, because that's the official family name, and that's what's on his birth certificate. LeBron James' only visit to New York at the Garden as Lakers beat the Knicks 192. So the Lakers are 35-9 as they play tonight in Brooklyn. Nets have lost 4 straight, 9 of 11. Zion Williamson made his NBA debut in New Orleans. The rookie had been out with a knee injury, struggled earlier, and then caught fire. 17 straight fourth-quarter points, though the Pelicans lost to San Antonio. Seton Hall beat Providence 73-64. The Rutgers lost at Iowa 85-80. Fordham's first Atlantic 10 win of the year over GW. With the Bloomberg NBC Sports Update, I'm John Stashower. Nathan?
Thank you, John. 6:37 on Wall Street. And today the government issues its weekly report on jobless claims. Economists forecast an increase of 10,000. Here with more is Bloomberg's Vinny Del Giudice.
The prior report showed jobless claims dropped to a 6-week low, but the headline can bounce around over the holidays and into January. Blame it on seasonal quirks and collecting and analyzing the data. Big picture, unemployment is at a half-century low. Also today, look for the Bloomberg Consumer Comfort Index, which set a 2-decade high in early January. Vinny Del Giudice, Bloomberg Daybreak.
All right, Vinny, thank you. It's just before 6:38 on Wall Street.
The following commentary is from Bloomberg Opinion.
Wall Street's bond transparency letters are revealing. I'm Brian Chapata, a columnist for Bloomberg Opinion. In most bond market battles, if BlackRock and PIMCO are on the same side, it's safe to assume they'll come out victorious. However, their push to delay reporting of large corporate bond trades for 48 hours, instead of the current 15 minutes, was so audacious that it seems to have left FINRA with little choice but to side against them, at least for the moment. It takes only a quick glance at comment letters to FINRA to understand why. There's real concern that this proposal was an attempt by the biggest investing firms to tilt the playing field to their advantage and that of large dealers. Federated investors claimed the plan was not to significantly improve liquidity, but to provide a relief valve for the largest asset managers. T. Rowe Price said it would create 2 tiers of haves and have-nots. While it's too soon to entirely rule out the possibility of some sort of corporate bond experiment, there's enough here for FINRA to pause. I'm Brian Chapata. For more opinion, please go to Bloomberg.com/opinion or OPIN Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
And you can hear Bloomberg Opinion commentaries every weekday at this time. Terminal customers can read more at OPIN Go. It is 6:39 on Wall Street. Time for the Bloomberg Small Business Report. Here's John Tucker.
On January 1st, the Labor Department began enforcing an annual salary threshold of $35,568, below which workers qualify for the time and a half overtime premium when they work over 40 hours in a week. It represents a boost from the previous salary cutoff of just over $23,000 seen in place since 2004. Even though it's considered a more modest bump to the salary threshold, it's challenging for smaller employees in select regions of the country who are forced to make sensitive choices on payroll, staffing, and benefits. Small businesses have been alternating between giving managers a raise to $35,568 or higher to maintain their exemption from overtime, or reclassifying them as overtime eligible while closely tracking their hours. And that's the Bloomberg Small Business Report. I'm John Tucker.
Okay, John, thank you. Now, some other stories we're watching this morning. Shares of PG&E are up more than 7% in early trading. The California power giant reached a settlement with creditors on a $46 billion restructuring plan, bringing the utility closer to emerging from the biggest utility bankruptcy in U.S. history. Amazon is back in court over that $10 billion Pentagon cloud contract, asking a judge to prevent Microsoft from working on it till a lawsuit over it is resolved. The complaint claims President Trump's dislike of Amazon CEO Jeff Bezos played a role in Microsoft winning the deal. And Bloomberg News has learned Wells Fargo's main regulators preparing civil charges against as many as 10 former managers in relation to their roles in its retail banking scandals. This is Bloomberg.
Hey, y'all, Jeff Foxworthy here. Now, if you've ever found yourself repeating the same thing over and over for 75 years, you might be Smokey Bear.
Only you can prevent wildfires.
That's why I'm filling in for Smokey to switch things up, because there's a lot more to say. And I should know because my grandfather was a firefighter. And one of the things he taught me is that the people that love the outdoors the most are often the ones accidentally starting wildfires, which means always BYOB. No, bring your own bucket to the campfire. And be extra careful with things like burning yard trimmings. Don't just walk away, or chances are you might be starting a wildfire. So for the love of the outdoors, go to SmokeyBear.com to learn more about wildfire prevention. Brought to you by the U.S. Forest Service, your state forester, and the Ad Council.
Why has J.D. Power ranked Commonwealth Financial Network #1 in independent advisor satisfaction among financial investment firms for the 6th straight time? We think it comes down to one thing: you. Because it's your input and feedback that keeps us focused on what's most important to you and your clients and continually pushes us to be the best we can be. Maybe that's why we receive top marks in every category of the J.D. Power 2019 Advisor Satisfaction Survey. They named us #1 in client support, #1 in firm leadership, #1 in operational support, #1 in compensation, #1 in professional development support, and #1 in technology support. Ready to partner with the best? Call Commonwealth at 866-462-3638 or visit commonwealth.com and feel the power. Member FINRA SIPC, a registered investment advisor. For 2019 J.D. Power award information, visit jdpower.com/awards.
This is a Bloomberg Pursuits look at luxury. Gwyneth Paltrow. Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards at the goal line. It's intercepted.
Listen live as the action unfolds, or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught. It is in for the right side for the touchdown to Keenan.
Search NFL today.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip Bayless.
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Pascal gobbles up the rebound and slams it down.
Catch your favorite NBA team right here on TuneIn.
A step back, deep three is up and in.
Search NBA on TuneIn and hear all the action. The NBA lives on TuneIn.
Start hearing more of what you want. Upgrade to TuneIn Premium and get over 45 commercial-free music stations, live commercial-free news, and every live NFL, MLB, NBA, and NHL game. Visit TuneIn.com/premium to upgrade.
Financial information 24 hours a day. Powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg Radio. Now, a global news update.
House Democrats prosecuting President Trump's impeachment trial are preparing for a second day of arguments today. In yesterday's argument, lead House Manager Adam Schiff saying the military and diplomatic witnesses who appeared before the House impeachment inquiry showed courage, asking those in the Senate chamber to do the same.
They risked everything, their careers. And yes, I know what you're asked to decide may risk yours too. But if they could show the courage, so can we.
The president's lawyers will begin presenting their case on Saturday. 2 cities in central China totaling 17 million people are shut down this morning, with residents told to stay put as Chinese health workers try to contain the spreading coronavirus outbreak, which has already spread to other cities and countries. 9 parents who were deported by the Trump administration as they separated thousands of migrant families landed back in the U.S. last night at Los Angeles, reuniting with kids they have not seen in a year and a half. I'm Michael Toscano.
Tom Keene and Jonathan Farrell.
Is that good for American finance?
What is happening with the head count?
Right, where it counts. Bloomberg Surveillance, weekday mornings at 7 Eastern on Bloomberg Radio. Bloomberg, the world is listening. Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow at 6:47 on Wall Street. Futures this morning are little change. We go to the First Word breaking news desk for today's morning call. Here's Bill Maloney. Bill, good morning.
And good morning, Karen. That's right. U.S. futures are quiet right now. Dow futures down 24 points. S&P's drop a point. And NASDAQ futures are higher by 4. The U.S. 10-year yield at 1.75%. Gold is down 4. And Shanghai fell 2.8% overnight as China extended its travel ban. European markets are trading mixed this morning. And back in the U.S. on the economic front at 8:30, initial jobless claims. At 10 o'clock, leading index. And at 11 o'clock, the Kansas City Fed. After the bell last night, Citrix Systems beat estimates. And regarding earnings this morning, look for Procter & Gamble to report around 7 a.m., American Airlines around 7:30, and Union Pacific around 8 a.m. In other news, Tesla is down 1.8% in the pre-market after surging as much as 8.6% yesterday. And Texas Instruments price target was raised to 150 over at Citigroup. Wrapping things up, GE was raised to overweight at Morgan Stanley. Shares are trading higher by 3% in the pre-market. Live from the First Word breaking news desk, I'm Bill Maloney. Karen?
All right, Bill, thank you. And to hear live breaking news over your Bloomberg, type squawk on your terminal, SQUAWK. Also watching this headline, crossing the Bloomberg amid those lingering concerns over the coronavirus. Hong Kong officials are canceling a Lunar New Year carnival and a football match as well. They're also asking all high-speed rail travelers to declare health records. And that's a Bloomberg Business Flash. Now here's Michael Barr with more on what's going on around the world. Michael.
Karen, House managers continue their opening arguments in the Senate's impeachment trial for the second day today. Yesterday, Democrats tried to lay out their case repeatedly, reminding Republicans of the need to call for additional witnesses and evidence blocked by the Trump administration. Vice President Mike Pence is in Israel to take part in a ceremony to mark International Holocaust Memorial Day on Monday. Israel is hosting more than 40 heads of state in Jerusalem to mark the 75th anniversary of the liberation of Auschwitz, the Nazi death camp where over 1 million Jews were murdered. New York Giants quarterback Eli Manning has retired. The Giants said that Manning, who led the team to 2 Super Bowl wins, will formally announce his retirement tomorrow. In the NBA, the Knicks lost along with the Wizards and Warriors. The Celtics won. Finally, from daybreak on the Bloomberg, Japan has been pushing men to take paternity leave to help working mothers. Thing is, almost 1/3 of the 508 mothers surveyed by motherhood information portal Mammary said that their partners do little to help around the house while they're off work. Nathan, the mom, said that they end up doing the housework themselves, and their husbands, who went all Fred Flintstone on them, use some time to have fun.
Oh, with the feet coming out of the car. I get what you're saying there, Michael. Come on. Step up, guys. Take the time. Family first.
Don't go bowling. Help your wife.
Absolutely.
Yes. Global news, 24 hours a day, on air, and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries, unless you're buying the Flintstone copter. I'm Michael Barr. This is Bloomberg, Nathan.
I'll cancel our booking at the bowling alley. Thank you, Michael. We are live from the Bloomberg Interactive Brokers Studios, or it's 6:50 on Wall Street. Time to check what's going on in D.C., where some of the top stories include President Trump speaking at a Republican National Committee winter meeting at his Doral Resort in Miami. Amazon asking a court to block Microsoft's work on the Pentagon cloud contract while it's in litigation. And the president planning to become the first sitting U.S. president to attend the March for Life in Washington. That's happening tomorrow. Also making news, day 2 of the impeachment trial arguments about to get underway this afternoon as Democrats paint the president as a danger to democracy. For more, we bring in Bloomberg U.S. politics editor Kathleen Hunter. And we saw a pretty exhaustive case laid out by Democrats led by House Intelligence Chairman Adam Schiff yesterday. Can you kind of walk us through what we heard on day 1, Kate?
Yes, certainly. I mean, Adam Schiff was very methodical in how he laid out the case that Democrats are trying to make against the president, sort of going back over some of the testimony that was given, particularly from folks like Ambassador Bill Taylor, which was widely considered at the time to be pretty bombshell testimony, kind of going back over that and really making the case that the president, both in his phone call with Ukraine's president over the summer, and then in subsequent actions, both before and after that phone call, really abused his power and, acted as though he was above the law. And so I think that's the crux of the argument that Democrats are trying to make here, and they're going to continue making that argument today. We know there are 2 articles of impeachment. Today they're going to focus on the abuse of power one and really try to hammer home the case that Trump, perhaps even in Democrats telling of it, endangered national security through his abuse of his office.
So how much more are we expected to learn on the abuse of power article, given that so much of the argument that was made yesterday was on many of those points regarding the president's actions toward Ukraine?
Yeah, I think that this is, a way to think about it is it's very akin to when there's a trial, kind of having the opening arguments in the trial. This is not just, this isn't necessarily the spot where evidence and new information is introduced. It's sort of a chance for Adam Schiff and the other House managers to sort of weave a tale and weave a narrative, both for the senators that are sitting in the chamber and for the U.S. public that's watching at home.
You raised the question about evidence. That has been the big unanswered question as these proceedings continue, whether there will be more evidence, more documents, witnesses allowed to be questioned. Do we have any indication based on what we've seen from the arguments so far, whether the needle has moved one way or the other on that question?
Well, the senators to watch there are really just a handful of moderate Republicans, folks like Susan Collins of Maine, Lisa Murkowski of Alaska, and Mitt Romney of Utah. And I think that there really isn't any indication at this stage that they've been swayed to the Democrats' way of thinking in terms of breaking with their party and supporting the calling of witnesses that would need to happen in order for Democrats to have the votes they would need. So far, there really aren't any indications of that, but in some ways, it's still early days. There's going to be another full day of arguments made. And, if you're one of those Republican senators, it doesn't really make sense to tip your hand at this stage.
And I guess it's probably early days to ask this question, whether the sentiment of the American people is being moved by these arguments, because that is a major audience, particularly that the Democrats are trying to sway here.
Absolutely. And I think we may not know for, a few weeks whether or not there really was any moving of the needle. All indications have been that, among both parties' core bases of support, i.e. hardcore Republicans, hardcore Democrats, there really hasn't been any movement. Those people that, supported Trump heading into this are still firm supporters of his. Those people that thought Trump was corrupt heading into this still think that. But the question is whether independents have moved at all. There hasn't been a lot of indication through this whole process going back to September when Nancy Pelosi first announced that the House would pursue an impeachment inquiry. There hasn't been a lot of indication that independent voters have been significantly swayed by this. But I think that would be worth continuing to watch as the trial proceeds. We do already pretty much know what the outcome is, and it's not even really registering in polling that indicates that this might be, what the top issues that Americans are thinking about heading into the election. The impeachment proceedings aren't really registering as a top issue, but of course that could still change, and it bears watching.
And our last minute here, it's fascinating that as these impeachment proceedings are going on, President Trump seems to be very focused on shoring up his base. Surprise announcement on Twitter last night that he is going to attend for the first time as sitting president the anti-abortion rights March for Life in Washington. What's the significance of this?
Well, abortion is obviously a very significant issue to the Republican base. And so for Trump becoming the first president to attend this rally in person, that's sending a pretty clear message to his base, and certainly throwing them some red meat. It's something that they're undoubtedly gonna really appreciate. And so I think that could be the type of thing that brings attention to the issue of abortion. We also know that there are a couple of pending Supreme Court cases that could get rulings on the abortion issue prior to the election. And so that is another way in which Trump may be having some forethought here in terms of thinking that he's going to get on the right side of this and remind his base where he stands on abortion, that he has a firm record on that, at least, during his time campaigning in an office, maybe not before he ran for president. But I think he's trying to, make that very clear ahead of that potentially becoming a dividing issue between him and whoever the Democratic candidate is.
Bloomberg U.S. Politics Editor Kathleen Hunter, thank you as always. Karen?
All right, Nathan, thank you. It is 6:56 on Wall Street. Time for the Bloomberg Green Report. Here's Bob Moon.
Time's up. For some parts of the planet, the time to brace for climate change has passed. The permanent effects are already happening. Australia's forests are burning at a rate unmatched in modern times. And scientists say the landscape is being permanently altered as the warming climate brings profound changes. With blazes still raging in the country's southeast, government officials are drawing up plans to reseed burned areas to speed up forest recovery. But some experts doubt that reseeding can match the scope of the destruction. 40,000 square miles so far this season. That's an area about as big as Ohio. Before the recent wildfires, ecologists divided up Australia's native vegetation into two categories: fire-adapted landscapes that burn periodically and those that don't burn. In the recent fires, that distinction lost meaning. Even rainforests and peat swamps caught fire, likely changing them forever. That's the Bloomberg Green Business Report. I'm Bob Moon.
All right, Bob, thank you. Watching earnings from Travelers crossing the Bloomberg fourth quarter core profit, beating analyst estimates, and fourth quarter revenue just beating as well. And futures this morning are little change, with S&P futures up less than a point, Dow futures down 12, NASDAQ futures up 7, and the 10-year Treasury up 5/32, yield 1.74%. Bloomberg Surveillance live in Davos with Tom Keene and Jonathan Farrow. For Nathan Hager, I'm Karen Moscow, and this is Bloomberg.
Keys. Check. Phone. Check. 70s playlist downloaded? Check. Nice. There's one more thing you should check before you leave. Your travel. There's a new cycleway under construction between Kensington Olympia and Brentford Town Centre, so expect delays due to lane closures at the junction of Kew Bridge Road and Chiswick High Road. Plan ahead at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip Bayless.
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
On the goal line, scores! It takes it home!
Hockey fans, the 2019-20 NHL season is here.
Here's Pietrangelo, he scores!
And you You hear the action live on TuneIn Premium.
And a shot.
From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
Upgrade today.
Make a call given the data.
Which segments of Alphabet's business are most likely to come under scrutiny?
Get all the pieces.
They're getting mixed signals from governments.
He's failed to gain traction.
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio.
From Davos, Switzerland, for our audience worldwide, good afternoon. Good afternoon. This is Bloomberg Surveillance, live on Bloomberg TV and on Bloomberg Radio at the World Economic Forum alongside Tom Keene. I'm Jonathan Ferro. What a 24 hours we've had with markets at the absolute epicenter of the conversations you and I have been having, Tom. And once again, today, no different.
Absolutely no different. And again, this happens every year at Davos, but there's a different character this year. There is a shift on Wednesday, and we saw that yesterday. And John's question to Bob Prince, I'll have you set that up in a moment.
Yeah.
But the follow-on to this, folks, last night through the evening is investment and finance theory of boom, bust, and all. And the conversation is carried right on from that.
The CEOs here at the World Economic Forum quite comfortable with the year ahead, I would say.
Yes, very
But when you speak to the people in markets, incredibly polarized. Take a Bob Prince from Bridgewater, who said to us just yesterday that ultimately the boom-bust cycle, as we'd known it, is over. Take him on the one hand, take Scott Miner to Guggenheim on the other, who's basically saying this market's a Ponzi scheme.
Well, so this is an important nuance. Mr. Miner to Guggenheim is not saying the world's going to end, but okay, it's on the edge of that. What's important is two people after Bob Prince, James Gorman of Morgan Stanley, and from an academic standpoint, the legendary Carmen Reinhart of Harvard. They said, Bob Prince, you're wrong. Bob Prince, you're wrong.
The other big debate, is it or isn't it QE? Yesterday, Morgan Stanley's James Gorman weighing in saying, it is QE. A little bit later today, you don't want to miss this interview, Tom and me sitting down with the Goldman Sachs CEO, David Solomon. First question, is it or isn't it QE?
Is it a QE? And maybe that'll be the first question to Madame Lagarde today at the ECB meeting.
Yep, 24 hours out from an ECB meeting. Everybody was talking about it yesterday. Today, this morning, it is a big part of the conversation as well. We'll bring you that ECB decision a little bit later this morning. We'll bring you the news conference too. Coming up a little bit later, the Prime Minister of the Netherlands. Don't miss that conversation. We'll speak to Stacey Cunningham as well. And, of course, the main event a little bit later this afternoon, Goldman Sachs Chairman and CEO David Solomon. Got to get you up to speed on the price action as well. In the markets, really, really interesting. Tension in Asia. Cities as big as 11 million people shutting down because of the coronavirus. No follow-through into the United States, Tom. This is important. Asian equity markets hit hard. You look at the United States, futures going nowhere.
In the last hour, our conversation in Geneva, Switzerland, as the World Health Organization drives us forward into the European day.
We'll talk about that a little bit more a little bit later. The main event, though, in the last 24 hours, I know a lot of you are talking about it. Bob Prince of Bridgewater Associates, the co-CIO. Take a listen.
2018, I think, was a lesson learned. The tightening of central banks all around the world. It wasn't intended to cause a downturn, wasn't intended to cause what it did. But I think lessons were learned from that. And I think it was really a marker that we've probably seen the end of the boom-bust cycle.
Is it the end of the hedge fund business in modeling portfolios off the guesstimates of what central banks will do?
That won't play much of a role, nearly like as it has. I mean, you remember the 80s when we sat and waited for the money supply numbers. We've come a long way since then.
John, you have no idea how lucky you were to have missed this. 3 p.m. Thursdays, was it?
Yeah.
M1, M2, M3. Oh!
Traders literally betting on the number, right?
Yeah.
But, now we talk 25 plus, 25 minus. We're not even going to get 25 plus or minus, and we got negative yields. That idea of the boom-bust cycle and that history that we've been in for decades is really driven by shifts in credit and monetary policy. But you're in a situation now where the Fed is in a box. They can't tighten and they can't ease, and nor can other central banks, particularly the reserve currencies. And so where do you go from here? It's not going to look like it has.
Bob, you've just said it twice, and I'm still surprised. And you said it before the interview started, and I'm still surprised. It's the end of the boom-bust cycle.
As we know it.
There was a man called Gordon Brown, the former Chancellor in the United Kingdom.
Walked by the other day.
A famous scene in Parliament of him standing up and saying, it's the end of boom bust. And it was right before the financial crisis. As the end of the boom bust cycle as we know it, what does that mean?
Well, as I said, the cycles in growth are caused by the boom and bust in credit expansion, credit contraction, and those expansions and contraction in credit are largely driven by changes in monetary policy. And so we're in a situation today where, with interest rates close to zero and secular deflationary forces, you're not going to get a tightening of monetary policy. They learned that lesson last year, got the unintended effects of that. You're not going to get a tightening, and one of the reasons you're not going to get a tightening is because they can't ease. See, if you can't ease, you don't want to tighten to cause the problem for yourself that you can't get out of, and therefore you're in a box.
And what you have there off of Bob Prince in Bridgewater is a window into the heated debates that are sometimes missed in Davos. The sequence here was John's good observation on boom bust and Mr. Prince back and forth with us. It was picked up, of course, by Bloomberg doing a great job. Zero Hedge, a lengthy article. And John, this is the theoretical debate under the markets of an odd 2019. Bond prices up. Stock prices
I would say it's far more nuanced than the headline suggests, but we've had so much feedback about this one interview and those few comments. I would go to Klaus Vestessen of Pantheon, who put out a little note this morning that I found quite interesting. Of all the pushback, he said it's interesting. Isn't that an example that maybe we're still climbing the wall of worry? He'd be more worried if a lot more people agreed that we had seen the end of the boom-bust cycle.
No question about that. This is going to be one of our themes, and of course we'll touch on this with the leader of Goldman Sachs here later on Bloomberg Surveillance and into John's The Open. Right now we're going to open this hour, our first word news in New York. Here's Lisa Abramowitz.
Thank you so much, Tom Keene. House Intelligence Chairman Adam Schiff portrays President Trump as a danger to democracy. Schiff was the first Democrat to make his case in the Senate impeachment trial.
A president this unapologetic, this lawless, this unbound to the Constitution and the oath of office must be removed from that office.
The opening argument suggests a prosecution with two juries in mind. One is the senators who will vote on impeachment. The other, the American public who will cast ballots in less than 10 months. China is ramping up efforts to contain the deadly respiratory virus. The city at the center of the outbreak, Wuhan, has suspended outbound flights and rail service. It also stopped travel by bus, subway, and ferry. Nearby cities have imposed their own restrictions. The virus has killed at least 17 people and infected hundreds. The U.S. is stepping up pressure on South Korea, warning it will send layoff notices to almost 9,000 South Korean workers at U.S. bases there. That is, if South Korea doesn't agree to pay more for American forces. President Trump wants to bill Seoul more than 5 times as much. And the UK is a step closer to leaving the European Union. Parliament has approved Prime Minister Boris Johnson's Brexit deal. Now it goes to the Queen for her signature. Then the agreement will formally be ratified by the European Parliament. All that sets up a transition period for the UK that will last until the end of the year. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Abramowitz. This is Bloomberg. Tom.
Lisa, thank you so much. John Farrow and Tom Keene at these meetings in Davos. Here's the evident idea. You can talk all you want up a happy valley in Switzerland. You got to go out there and do it. And if you do it, you've got to move it. And the obvious, most visible thing out there to move it is something 4 Liverpool football fields long. And what is it truly a football field wide?
Are you speaking of the Maersk Triple E?
This would be the boat, the boats, the ships that move all this stuff around. To me, the most articulate voice on this in shipping and the serious idea of climate change and the logistics and trade of the world is Mr. Skoo of Maersk. The Chief Executive Officer, Soren Skoo, joins us now. We talk often in London. Thrilled to have you here. How do you respond to the visible elites of climate change who don't realize you've got to get the boxes in Asia from point A to point B?
Well,
First, I always say that shipping is actually the most environmentally free, environmentally way of moving any type of good. So the CO2 emission that we have per any ton of good moved is quite low compared to road and rail and air. But we still take on the challenge of wanting to reduce our CO2 footprint, and we have articulated more than a year ago an ambition to get to zero CO2 by 2050, and we have solid plans for how to get there.
How do you plan to do that? Talk to us about those plans.
Well, we want to find it. I mean, the obvious is we need to find a different kind of fuel, and we believe that we have fuels that are probable, alcohols, ammonia, methane that can be produced from alternative sources.
This is important because it's about the fuel and not about the ship. Because you're in a really, really tough spot. You have to plan a decade, multi-decades ahead from where you are right now. So it's not as simple as saying we're going to build a whole load of new ships. Walk me through the strategic thinking around issues like that.
Well, we believe, first of all, that we have a responsibility as a leader in the industry to drive the agenda. Secondly, as you say, we own assets that have a 25-year lifespan. I cannot be caught up by a regulation that tells me to do something completely different when we operate more than 700 ships. So we need to think ahead.
You are front and center in this new world. Some would suggest that President Trump has moved aggressively from a multilateral Maersk world where trade gets done to some form of bilateral world or almost a mercantile system. How is your business changed with not the trade war, but the many trades war, the new trade dynamic? How's it changed?
Well, clearly growth is down. Up to the financial crisis, 25 years leading up to the financial crisis 10 years ago, trade was growing 7, 8, 9, 10% per year, trade liberalization and so on. And since then, we've seen much lower levels of growth. And in last year, we believe probably the numbers, when they're all said and done, will come in at slightly less than 2% growth. It's a very low number.
You expect that to pick up? You're seeing improving business in the new year?
I don't think that we'll see much higher trade growth.
It's just going to stay the same?
Yes.
Despite the fact that we have some kind of trade truce between the United States and China?
What we see in our numbers based on the commodities that are being shipped is that actually all of the consumer goods are holding up quite fine across the world. It's the capital goods that are not moving, and that's because business leaders like myself are worried about the future and we invest less.
In your Denmark, and folks, I want to make clear, Denmark is the space of economics of geography in the world. It's the best academics on this that there is. There is the geography of the South China Sea, of Singapore, of Indonesia, and that romantic strait that you got to get your boats through that strait at night at any time. That must be extraordinary. Give us an update on the ability to move Maersk ships from point A to point B in the South China Sea in the Pacific.
Today we are seeing no impediments or any restrictions or anything that we need to be concerned about. You're right, the Malacca Strait between Singapore and Indonesia is a very narrow channel, but as of today, we don't see any problems there.
You said trade is basically where it was last year. Don't really see it improving. Let's talk about rates, container rates. You're speaking to your big clients. What have they said so far? What do rates look like, and how are things going to evolve in a year ahead?
Freight rates have gone up quite substantially since the 1st of October last year, mainly because we have switched over to a cleaner fuel on the 1st of January, and we're passing that on to the customers.
Well, let's cut to the chase. We're going to make some news here. How do your customers receive the new invoice?
Well, it's always a procurement discussion, but at the end of the day, I believe that many of our customers recognize that it's good for everybody that we go to a cleaner fuel.
Quick final question, just before we let you go. If we can get the Maersk stock out there for people to have a look at, and for our listeners on radio, I'm going to tell you, it is several digits long. Some people always ask me, when are they going to do a stock split? When will Maersk do a stock split? This is getting ridiculous now. When are you going to do a stock split?
I can just say we don't have any plans to do a stock split.
Okay, we'll leave it there. Søren Skou of Maersk, the CEO. Look at the numbers. Hey, for our listeners on radio, several digits long in Danish kroner.
We can do digits on radio. That works.
Søren Skou,
thank you so much.
About his plans for the future. Coming up on this program, still a lot more ahead, including David Solomon of Goldman Sachs a little bit later this afternoon. Up next on this program, the Dutch Prime Minister, Mark Rutte. From Davos, Switzerland, this is Bloomberg.
asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their businesses strategically, yet the most competitive managers in the market know with the right partner and a flexible operating system, you can. Go boldly toward change with SEI Investment Manager Services.
I'm Steve Meyer, president of SEI's Investment Manager Services. At SEI, we understand the emerging forces that will define success for asset managers and what firms will need to compete tomorrow. That's why we continually optimize SEI's global operating platform. If your business requires greater agility, our advanced technology, integrated best-in-class systems, and multi-asset expertise can be your catalyst for business transformation.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
Influential conversation.
Welcome to Nuffield Health Battersea, a gym built around you. You get regular health MOTs to create a plan that works for you, with physios and personal trainers on site. You'll find a wide range of equipment and classes, and our expert team will support you to get the most out of your health, fitness, and your membership. Join today to get the rest of the month free. Search Nuffield Health. Specialists in you. 12-month commitments only. Facilities stated are in most gyms. Visit nuffieldhealth.com/terms.
This is not a cat. This is not a rocket. And this is not a sale. That's right. At Smarty Mobile, we're not having a sale. While others are slashing prices, we're introducing our best ever new plans. Take our new 30-gig data SIM for just £10 a month. With unlimited calls and texts and no speed restrictions, credit checks or contract tying you down, why shop around? New plans, great value. Now that's Smarty. Grab yours today. Search Smarty Mobile. See smarty.co.uk for terms.
The Honda Jazz, the car that feels fabulously small on the outside, yet deceptively big on the inside, with its incredible storage solutions and magic folding seats. Not to mention the suite of advanced safety features. And now with the small but big Jazz event, it's available with 0% APR representative and 5 years complimentary servicing until January 31st. Visit your local dealer to find out more. Honda dealers are credit brokers, not lenders. Finance provided by Honda Finance Europe, authorized and regulated by the Financial Conduct Authority. Terms and conditions apply.
Want to work on, respectfully, Europe. But Europe, so beautiful. I guess a lot of us come indirectly from Europe. Isn't that nice? But they are actually more difficult to do business with than China.
And that was the President of the United States, Donald Trump, speaking at Davos, Switzerland, just in the last 24 hours, taking aim at the European Union.
And you nailed John. John selected that side, and you nailed that as the single most important statement of the entire many press conferences yesterday.
The President of the United States just pulling a pin and lobbing a grenade into this conference yesterday, and it was a total 180 from what we thought we heard from the administration the day before. We can get real reaction from Europe now with Mark Rutte, the Dutch Prime Minister. Prime Minister, great to see you.
Good to see you again.
Your annual visit with Tom and myself. It's great to see you. How do you respond to the President of the United States?
Positively, because he also had a very successful meeting with Ursula von der Leyen. She is the new EU Commission President. They agreed that it was a good meeting, that they will continue the dialogue as soon as possible. I've had myself many conversations with Trump on trade. I always found him very pragmatic and very practical. He has his irritations about Europe. We have some issues issues with the US, but that is not a problem. That's why you have to negotiate. I think we can get a deal done.
I wonder if you're more annoyed with France than you are the United States at the moment, because it's the policies of France that are causing much of the problems. Secretary Mnuchin said the following this week: if people want to just arbitrarily put taxes on our digital companies, we will consider arbitrarily putting taxes on car companies.
Yeah, but that is a discussion about digital tax. I think best will be to deal with the issue of digital tax in the context of the OECD. It can also be part of the talks between the US and Europe. But don't forget, the US is the #1 economy in the world and the most powerful country. But in terms of overall economic size, Europe is bigger. We are 1.5 times the size of the US. So when they deal with China, it's not about first place, it's about second place.
But Prime Minister, you bring up a key point. Montana has the same voice in President Trump as Mississippi. There are many voices of Europe. What is the most efficacious way for Europe to speak to the President of the United States on trade?
Directly. And forthright. With Trump, you have to be
Brussels
very clear.
And out of Strasbourg. I mean, who's the voice that's going to sit across the table from the President
That
of the
is the
United
President of
States?
the European Commission, because this is a European thing. And we are united in the European Union on trade. We always have. One of the few very successful things we are doing. I mean, we have very many issues in Europe about climate change, about migration. But one of the consistently successful things we are dealing with as a European Union is trade. And we have to work with one voice. We are doing that also with the UK when they are leaving from next week onwards. We have to create a new trade deal. So I'm optimistic about it, because we know what is important for Trump. We know what is important for Europe. And we are both pragmatical.
Well,
and the rhetoric in the run-up is always part of that.
There are some easy things to do. One of them is just look at the tariffs on autos. If you import a car out of the United States into Europe, 10%. If you import a passenger car out of Europe into the United States, the tariff is 2.5%.
Yeah, but on SUVs, it's 25%.
Trucks are much higher, 25%, which goes back decades.
So on average,
can we address this? Can we just equalise the whole thing?
Well, I discussed that with Trump myself, and on average, it is about 9% from a car coming out of Europe. The 2.5, 25 put together is about 9%, and a car coming out of the US is 10%. So it is already almost the same. This is not a big issue. I think we can deal with this.
As I've asked before this morning, I want you to identify what the new capitalism will be for Europe. The Dutch have led on capitalism for well in excess of 400 years as well. Do you sense with the solution of Brexit, do you sense with some form of trade agreement with the United States, a less multilateral approach, that there has to be a new capitalism out of Europe, a new attitude?
No, not a new capitalism, but we have to learn from the past. Dutch companies like Shell, Unilever, Philips, Axo, they always were both successful, internationally oriented companies, but also very much rooted in the local communities in the countries which they were serving. And they still are. I'm still very proud of these companies. Some of the companies recently coming into place have less of a connection to the local communities. Do not fully realize that next to making a nice profit, there's also a societal impact as a company. And the good you can do in terms of making sure that the changes to the environment are not taking place, and the role you can play there. And I believe we should put more emphasis on that.
As John mentions the French and the challenges Mr. Macron has domestically, or the transition of power after the Merkel era in Germany, what part can the Netherlands play to provide a center to Europe, a more coalescing capitalism?
Well, we believe that with the UK leaving, we're one of the countries with the most international outlook, the most trade-oriented, the most free enterprise-oriented countries. We work very closely together with the Scandinavian EU countries, with the Baltic countries, Slovenia, with Ireland, but also with Belgium and Luxembourg within the Benelux. That is a powerful group of countries who all share this outlook on capitalism, on international trade. At the same time, we have a strong bilateral relationship with Germany, with France. I was last week in Italy. We are building a strong relationship with the Italian government, a bilateral relationship within the EU, because this is needed to maintain that outlook on the world with the UK leaving.
We're pushed for time. Let's get the UK leaving into the conversation. You're very pragmatic, in fact, respectful of the US administration, and that's encouraging about ultimately coming to a positive outcome with the United States. Are you equally the same with the UK at the moment?
Well, I have one worry, and that
is
is the time we have available, because they will leave formally next week, but basically they won't leave at all. They will only leave the political structures. Yep. They will still be part of everything else in the EU till the end of the year. And in the meantime, we have to solve this trade deal. But for this trade deal to be solved, we need to agree on level playing field and all the other issues. It's an awfully short amount of time. So I hope that coming next summer, June, July, that Boris Johnson will at least contemplate extending, if necessary, this transition phase.
At the moment, he's not.
At the moment, he's not. But also here, I would say, let's take this step by step.
So you're just saying it's inconceivable that you can come to the trade agreement?
Not inconceivable, but it's very difficult. So, and then you, and there's still the risk, in the worst case, that you have a cliff edge scenario, like we had experienced last year.
This is a nightmare scenario. Because what we're going to end up with at Heathrow is Virgil van Dijk is not going to be able to go through customs like he can now. I mean, let's bring it, the gentleman from Breda and Groningen, he's got to get up to Liverpool, and there he is stuck at Heathrow in the new customs line.
Unacceptable.
Unacceptable.
It's unacceptable. He will return to the Netherlands.
For our US audience, can we explain who Virgil van Dijk is?
Well, I know who he is because I've been lectured
to. The greatest centre-back in football at the moment.
One of the great players in the Dutch team.
Absolutely
and the reason why we will win the European Championship.
You think you're going to win?
Absolutely. No
really?
Doubt. No doubt.
Couple of injuries. Not worried at all?
Yeah, that's also part of it. And they hopefully will be back in time.
This goes to the... we're going to have to talk about this later on the Dutch Prime Minister's next visit to New York and London.
I just love that we have the Dutch Prime Minister with us and we end up talking about your favourite topic.
I love watching... He's like Aaron Judge of the New York Yankees. He's out of body.
Fantastic. He's something else. Margaret, great to catch up with you once again.
Good to be here.
The Dutch Prime Minister in Davos.
He doesn't wait in line at
the World Economic Forum.
Prime Minister does not wait in line.
Well, he goes through that special lane, doesn't he?
When I travel privately, I wait in line.
Goes through that.
When I would travel through Boris Johnson official capacity, I would be, well, hoovered around. But in a private capacity, I have to wait in the same line as you.
Coming up on this programme, Bill Winters, Standard Chartered CEO. He'll be joining us very shortly with Francine Lacqua. Don't miss that conversation. A lot more coming up through the day, including an interview with the CEO of Goldman Sachs, David Solomon, from Switzerland at the World Economic Forum. This is Bloomberg.
Imagine being denied an apartment because of your religion, or your race, or because you have children, or a disability.
It's so wrong.
Yes, but who has the power to stop this?
You do. Each of us has the power. The law is on your side. It's illegal for landlords to discriminate because of race, color, religion, sex, national origin, disability, or familial status. If you suspect that you have experienced housing discrimination, file a complaint with HUD immediately so we can investigate it. Fair housing is your right.
Use it.
To learn more, visit HUD.gov/fairhousing. That's HUD.gov/fairhousing. Or call 1-800-669-9777. 1-800-669-9777. A public service message from HUD in partnership with the National Fair Housing Alliance.
Why do hedge funds and other alternative managers rely on Pershing for a highly personalized experience? Mark Alderati, a managing director at BNY Mellon's Pershing and head of Prime Services, explains.
In today's fast-paced environment, where the only constants are change and volatility, you need a prime broker who's both steady and agile, focused on supporting your needs so that you can focus on growing your business and producing results. Exceptional client service and advocating for our clients is at the core of what we do. Our award-winning high-touch team is just one of the benefits of working with BNY Mellon. We help alternative investment managers create great experiences for their clients. Whether it's customized financing, securities lending solutions, platform access, or outsourced trading, BNY Mellon's Pershing is a prime broker who's committed to this business and dedicated to meeting your evolving demands.
To learn more about the unique and industry-leading solutions for hedge funds and other alternative managers, visit Pershing.com. Pershing LLC. Member FINRA, NYSE, SIPC.
This is a Bloomberg Money Minute. Southwest Airlines beat analyst estimates in the latest quarter, but warned that a closely watched gauge of costs would climb again this quarter amid the extended grounding of the Boeing 737 MAX, while Southwest American and United have racked up expenses from the MAX grounding. The plane's absence has also supported fares by keeping a lid on seats and flights. TripAdvisor is cutting hundreds of jobs amid increasing...
Keys. Check. phone? Check. 70s playlist downloaded? Check. Nice. There's one more thing you should check before you leave. Your travel. There's a new cycleway under construction between Kensington Olympia and Brentford Town Centre, so expect delays due to lane closures at the junction of Kew Bridge Road and Chiswick High Road. Plan ahead at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
Hey NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards at the goal line, it's intercepted!
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught, it is in for the right side for the touchdown to Keenan.
Search NFL today.
Did you know your favorite radio stations are in your pocket? Yes, the TuneIn app lets you listen to the same radio stations you pick up on your home or car radio anywhere you want. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Bloomberg surveillance from Davos on the meetings of the World Economic Forum. It is a beautiful shot. In the distance is Italy. Or Liechtenstein.
Honestly, you say this
right
every
there.
year.
It's for Bloomberg Radio. I just want to make clear, right where we're looking now on Bloomberg Television, is where Hannibal crossed the Alps.
I can tell everyone on Bloomberg Radio that Tom has no idea where the camera's pointing. He has no idea what country on the other side.
North or south. We try to get a bearing once a day with the sun up and the sun down, and that is about it. The bearing here on a Thursday, though, John, is this is a really interesting Davos away from 08-09 financial crisis. There's a lot of really good themes.
It's not 2016 when everyone was worried about the world falling apart. It's not 2018.
Last year, Q4.
Certainly not that again. We're not experiencing that whatsoever. I think you have the CEO class concerned about not the cyclical issues, but the big structural issues like climate change and things like that. But when you talk to the markets people, you get a really polarized conversation about where we are and where we're going.
The raging debate over the efficient frontier, the allocation of bonds and equities as well. We're going to drive forward that debate with some good voices today. Let's do a data check right now. These sort of boring markets, but let's do a boring data check as I look at Italy.
Hey, well, Tom, it depends where you look at. If you look at the United States, things look boring. Really, really resilient equity market in America with futures down, just 2 points. If you looked at Asia overnight, Chinese equity markets down 3% and change. And at the epicenter, we know what the concerns are. That virus, Tom. And cities with populations as large as 10, 11 million people just shutting down, a travel ban, event ban going into the Chinese New Year as well. And so far for the markets, the concern isolated in Asia, no bleed through to the United States just yet.
The headlines of that forward here in the last 2 hours in Geneva, Switzerland. Our team there really focused on the World Health Organization. And to be honest, there's not news there. There's just a struggle to get the handle on the biology, if you will, of this virus as well. So one of the stories we're following as well, and the other one, of course, is ECB coming up.
15 minutes away.
It's been underplayed here, and that's wrong. It should be.
I think the news conference at this point is absolutely fascinating. And for President Christine Lagarde, we'll have a review of monetary policy. We'll do all that nice stuff. But I think there's a much more challenging thing right in front of her right now. And that's the division of the Governing Council over negative interest rates and whether the market starts to have the conversation she doesn't want to have. And that's whether the ECB is committed to where rates are currently.
And the committed part of it, folks, is very important. And this goes to the importance of the press conference and that the verbal dialogue here is absolutely critical. My panel yesterday with Kenneth Rogoff of Harvard and others, Ann Richards of Fidelity joined us, Paco Ibarra of Citigroup, was fascinating about the challenges that Madame Lagarde faces on negative rates, not from the bankers and economists, but from those managing money, as Ann Richards called it, actuarial hope over the reality of Paco Ibarra having to run risk off a book. Right now, on one of the themes here, which is emerging markets and the dynamics and stability of emerging markets, Francine Lacroix with an important conversation. Francine?
Yeah, thank you so much, Tom. First of all, Italy is definitely not on the other side, Tom, so I'm going to get you a map of the Davos Mountains. But on to things more. With that, a good conversation of international finance, but also strength of the emerging markets and some of the weaknesses as the chief executive of Standard Chartered. He's Bill Winters. Thank you so much for joining us. We Every time quiz you on Hong Kong and whether you've seen money flows, wealthy clients wanting to move their bank accounts out. Give us an update on that.
Yeah. First of all, nice to be here. Hong Kong's in good shape, right? I mean, it was a horrific 6 months and culminating in a really horrific period of violence in December. But while the issues are as yet unresolved, and we know that, so the idea that this is behind us would be hopeful but naive. But peace is prevailing in Hong Kong, and that's very encouraging. So what we saw through the worst of the period was some people, frankly, very few on a percentage basis, made some provisions to move their money someplace else, opening an account someplace, but virtually none of them actually moved their money. So the business activity has stayed very strong in Hong Kong. So Hong Kong as a trading hub, Hong Kong as a financial center, and we see it from the IPO calendars, and is very strong. And they haven't missed a beat in that regard. The hospitality, the retail sectors, tourism have been severely impacted. Obviously, a big chunk of the tourism came from mainland China. It will take a while for them to come back. They had a bad experience when they were in Hong Kong, and the rest of the world has stayed away while things were unsettled. Now that peace is breaking out as it persists, as we hope it does, I think Hong Kong will get back to normal over the course of this year.
Moments ago, China has taken steps to actually cancel some of the lunar festivities, because of the coronavirus. Yeah. As a big chief executive in the region, how do you monitor and how do you prepare for it?
Well, it's concerning. I mean, we first start by making sure that our own colleagues are taking the proper precautions and safe. So you can imagine the level of anxiety is very, very high. If somebody gets a cold now, there's a question whether it's something much worse, and that can cause the whole office to lock down. So that's we start at home. We're trying to stay very close to our clients, help them understand what their exposures are. Obviously, people in the transportation and tourism industry themselves are at some risk within China, especially coming into Chinese New Year. So trying to help identify working capital needs or challenges that will come up if things progress as they have over the past 24 hours. Other than that, we're watching with the rest of the world and hoping.
But do you have operations that could be directly affected?
Yeah, we do. I was intending to be in Wuhan next week. I mean, we have a very substantial operation in Wuhan and Chongqing and Xi'an, all through Western China, and yes, so they're directly affected now.
So, are you speaking with health officials on the ground there, or who are you?
My colleagues in China are speaking with health officials continuously. But as you've seen and as you've reported, it's a very fast-moving set of facts. I mean, even today we've had new pieces of news. But we have our own intelligence on the ground as well from our clients and from our people. And it's very consistent with what we're hearing from the government. So I'm encouraged by this commitment to transparency. I could only encourage it to continue.
Are you encouraged by U.S.-China Phase 1 deal, or actually is Phase 1 nothing because it's simply an understanding that things won't escalate for now?
No, it's encouraging because they demonstrated that they can agree on something, and it has stopped a cycle of escalation. That's a good thing. There's a bit of clawback in terms of tariffs and protection of intellectual properties and opening up the financial services markets. These are all good things. Does it solve the problem? No, of course not. The structural issues are still there. But the fact that the two sides have demonstrated a willingness to agree on some things, we have to take as encouraging.
Does it help Standard Chartered?
With the tariffs going up, there was no particular impact on Standard Chartered, so coming down there won't be either. What's challenging is the prospect, the uncertainty around this prospect of a bifurcated world, with our customers and our clients not really knowing how much they have to reconfigure their supply chains, and if you don't know what you need to do, you tend to prepare for the worst, which usually means a lot of wasted cost and investment. So the increasing uncertainty was a problem. It's come off a little bit, but the uncertainty hasn't improved too much.
President Trump was here yesterday. He spoke to a number of business leaders. I think you were in some of those meetings. What was the message coming from the U.S. administration?
I mean, the key message I took away from the messages was that he's running for president of the United States. So the message would seem to be quite targeted at the domestic audience. It was, I'd say that the themes in Davos have overwhelmingly been sustainability. I mean, to the point that it's probably crowded out some other very important discussions like the challenges around inequality. But the traction on sustainability has been very impressive, I think. So hardcore commitments in terms of the metrics that we'll be using to measure progress. And I say specifically, what does my business contribute to this climate change dynamic, and what can I do about it? And then specific commitments from corporations and a willingness, I know, across the banking industry. I was chairing a session yesterday where we focused a lot on what the banks could do collectively to address the sustainability question. So, I mean, those are the messages coming out of Davos, and then there was some noise on the side.
Okay, if you look at markets, what is the one thing? We had geopolitical concerns, regarding Iran and Iraq. U.S.-China trade is at the forefront. U.S. elections, which you kind of mentioned. Out of those three, what's the biggest risk for the markets?
I think the big structural risk, because it's very impactful and as yet unresolved, although in a peaceful zone right now, is the U.S.-China tensions. Iraq, Iran, U.S., Saudi has the possibility to explode. Right now, that feels unlikely. I mean, it feels like there's been a dramatic escalation and then quick de-escalation. And certainly what I can pick up through the hallways, and it's just, I think everybody's got their views. There's a genuine willingness on all sides to try to de-escalate at this point. So, but of course, if that changed and it impacted oil flows through the straits, then we'd be in a very different place. To me, it still comes back to U.S., China, and getting some real progress there.
We're moments away from the ECB decision. Are central banks exhausted? Are they running out of ammunition?
I don't think they're running out of ammunition, but I think the ammunition is a little bit less effective. So, I mean, of course, there's new rounds of quantitative easing, or there's new types of assets that central banks could buy to affect credit spreads or even affect equity prices at a point. But it seems to be an exercise with diminishing returns. So I don't think they're out of tools by any means, but they might have to use more of those tools if they feel the need to use those tools at all.
Right, but we've heard President Lagarde of the ECB trying to put pressure on fiscal. If you were to quantify 2020, if we had one monetary policy or one fiscal policy, would it be, government spending more? And does that actually give you more business?
No, if there's a lesson that we've learned from developing markets through the years, it's that aggressive fiscal programs targeted at things that really improve the quality of an economy, so infrastructure, education, healthcare, those things are typically a really good use of money, especially when you're funding it with very low-cost debt, which is what we have right now. Fiscal deficits that are being used to drive consumption give you a sugar high, but don't structurally improve the ability of the economy to grow and strengthen. So I think to the extent that the U.S. and Germany, so the two guys with the biggest fiscal firepower right now, step up their fiscal spending, but focus on these structural value creators, that could be a very important complement to monetary policy.
But there's a little noise that Germany is ready to spend what a lot of people ask of them.
Well, they're under a lot of pressure. I don't know if they've internalized that yet.
Okay, the negative rates. How much of? Every bank is complaining about negative rates, but actually, do policymakers understand that this could not only lead to really testing the banking models even further, but actually social unrest?
I think policymakers have to be very careful about what they say, but I can't imagine that they don't know that it's not just bad for the banking system, it's very bad in terms of creating imbalances in the economy and imbalances in capital markets that when they unwind could be quite dangerous. And since it's clearly part of the central bank's mandate is financial stability, they know that this is another kind of drug that is also having diminishing returns and that is piling up quite a substantial problem for the future.
Very quickly on your turnaround plan, is it time to say mission accomplished?
Yeah, I never say mission accomplished, and it's not accomplished. But what I can say is that our bank is super strong at this point. We have all the foundations that we need. We have all the growth momentum in the key areas of our cross-border corporate business, our affluent client business, and then more recently our massive investments in digital banking. All those things are working extremely well. We just have to see them through to fruition.
Bill Winters, as always, thank you so much for joining us. He's the Chief Executive of Standard Chartered. With that, Tom, I'm going to send it back to you as we await the ECB and Christine Lagarde.
Francine, thank you so much. Yes, to the ECB. Always good to hear from Bill Winters. And, of course, Johnny has such a place in financial history, assisting Jamie Dimon with that really difficult acquisition of Bear Stearns.
Yeah, a few people used to work beneath Jamie Dimon, and then they went just daily to Barclays.
Well, the value was there, so they were stolen by other banks.
There's a few people that could have stepped up, maybe, to take that CEO.
But that's what we see.
Can we let our listeners on radio know what's happened? We're in a suit jacket.
Yeah, you are. It's so warm here this year.
So warm up here. Sun's on my back. We've got Troy Gayeski Skybridge with us too, also in a suit jacket.
Ready for the ECB countdown, but we should say good morning to all on Bloomberg Radio across the nation, Sirius XM Channel 119 in Boston, New York, Washington, and of course, early morning in San Francisco. We're from Davos, Switzerland, our special coverage. David Solomon to join us from Goldman Sachs here in a bit, but we've got a countdown right now, 2 minutes away.
Troy, what are you looking for?
Well, look, we don't expect much action in this meeting, right? I mean, I think all eyes from market participants like ourselves are still on the Fed in terms of their balance sheet expansion. You know, we're watching very closely the playoff between repo, which is coming down, and the $60 billion of Treasury bills, which is going up, which has actually flatlined their balance sheet expansion recently. And so, you know, the macro consensus, as we know it for Europe, is that you really need fiscal stimulus, you really need structural reforms, but all the energy is being sucked up in Merkel being a lame duck and Brexit for the time being.
Does President Lagarde directly address this raging debate over QE today?
You know, look, I think if you put yourself in her position, obviously there's more and more understanding that negative rates don't work, right? You actually, you know, hamper the banking system's ability to extend credit. You encourage more savings, which is exactly the opposite of what you want.
Do you think the Governing Council understands that?
It's hard to say, right? I mean, because there's really no consensus there for whether they should move back to more of zero or cut further. And they're in a quandary in terms of balance sheet expansion because their balance sheet's already so large and they haven't had the results that they would like. So it really gets back to until Europe embraces, particularly Germany, fiscal stimulus, it's very hard to see them grow at a rate that's even close to what the U.S. is growing at.
Because most people assume the decision that comes out around about 30 seconds will be a total snooze and that maybe the news conference will be as well. I think the news conferences of the ECB are going to get increasingly interesting for President Lagarde. The market is already starting to have the conversation about whether there is a division on the Governing Council over negative rates and whether that manifests itself, Tom, into a real decision to pull back perhaps later this year.
Just quickly here, or are they waiting for the next shock where action must be taken?
That decision, around about 10 seconds away, your price action ahead of that. Equity futures in the United States going absolutely nowhere. Really muted price action going into this in the equity market, in the bond market, and in foreign exchange as well. Let's get that decision. It's Bloomberg's Lisa Brownwitz.
Thank you so much, Jonathan Farrow. Yes, the ECB is announcing its first appraisal of its inflation goal since 2003, leaving its main refinancing rate unchanged at 0%. This is largely or completely expected, leaving the deposit facility rate unchanged also at negative 0.5%. They say that the ECB says that it sees rates at present or lower levels until inflation goal gets nearer. Meanwhile, we're seeing the inflation expectations over the next 5 to 10 years hovering around 1.3% versus more close to 2%, as they've been saying. Also, the ECB announcing its first strategic review of policy since 2003, widely expected given the fact that they have a reprieve, they have an opening. You have manufacturing data coming in a little bit more solid, so they can actually take this time to take a step back. So we are expecting the inflation goal perhaps to change a little bit in its guidance from where it is. Right now in markets, you're not seeing much of a response. Basically, the euro, a little change versus the dollar, just a little bit weaker versus the dollar. 2-year yields basically flat. But really the key thing, John and Tom, as you were saying, is really Christine Lagarde and what she has to say in this press conference, whether she'll talk about possibly buying green bonds for the ECB's balance sheet, whether she'll talk about how they plan to add ammunition if inflation does not meet their goals, as well as just the outlook going forward. Again, not much of a change, but we are going to hear a lot more when Christine Lagarde gets the stage in about 45 minutes' time. John and Tom.
Very good. Lisa Bramwitz, thank you so much. Greatly appreciate that. What we're going to do here, folks, we've got 8 ways to go, but what I want to use is the expertise of Troy Gajewski, is how his world at Skybridge adapts to what we just heard, what we saw. And then we've got to get to this important boom-bust debate. Troy Gajewski, it's simple. Macros underperforming. Is the game over in guesstimating the Fed and gaming a portfolio performance off economics?
Well, it's very hard to add value in liquid efficient markets, right? I mean, that's been the case for quite some time. When you think of macro managers today, they're better off adding value in emerging markets. That's where we've seen consistent outperformance. There's only a few managers that actually focus on that, however. So as an investor in hedge funds, your opportunity is somewhat limited. But we've always said, I mean, look, very, very hard to add value in the dollar euro, very hard to add value in guessing next Fed policy. So we do think for the most part it's a challenging environment for macro managers. That being said, as we've talked about before, we've been in an uptrend. The Fed's been expanding their balance sheet. They've cut rates dramatically. That is the consensus trade amongst macro managers in the U.S., of which there are far fewer now.
James Goldman of Morgan Stanley telling Tom and myself just yesterday, it's QE.
Yeah.
Is it QE?
It is QE. I mean,
so many people disagree with that view.
Look, It's very simple. We came into last year, it was January 2nd of last year, went on your show, and all the Fed had to do was nothing, and markets were going to rebound. But in order to keep powering this rally further, they're going to have to continue to expand their balance sheet. But it's dangerous territory, right? Because they're running the medium-term risk of asset bubbles in order to further dampen the risk of near-term recession. It's a trade-off that they're well aware of.
He slips into economics like that.
It's nice.
What's so important is that, folks, this is one of the social high points of the year. Mr. Gajewski and some others at Skybridge host truly a gentle, wonderful, elegiac wine party.
Is that what it is?
Everyone attends, and it's in 2 rooms at the Hotel Europa. One room is the boom room, and the other room is the bust room. Which was more attended this year, the boom room or the bust room?
Unfortunately, neither one of you attended, which really bummed me out on a personal level.
We were down having pizza with limo drivers.
Music to the ears of our bosses who are listening to this.
Yes.
We didn't go to the party.
No, they're working hard, everybody. They're working hard.
Yeah. Conversation about some comments made on this program by Bob Prince of Bridgewater. Let's listen back.
2018, I think, was a lesson learned. The tightening of central banks all around the world. It wasn't intended to cause a downturn, wasn't intended to cause what it did. But I think lessons were learned from that. And I think it was really a marker that we've probably seen the end of the boom-bust cycle.
The boom-bust cycle, as we know it, is over. Bob Prince of Bridgewater, your reaction?
It's insane. I mean, boom-bust cycles.
May we quote you on that?
Feel free. I mean, I was actually shocked at the end of each day. I go through a news roundup, and when I saw that, combined with the statement of Ray Dalio that cash is trash and all risk assets are going up, you step back and you wonder if when the bearish guys, Bridgewater's been very bearish, start to get that bullish. It could be a dangerous development.
So many ways to go. And I want to make clear, Mr. Farrow's the one who instituted this boom-bust debate. And there was, for those of you that aren't up to speed with the social flow of what we do on Global Wall Street, the response was huge to this interview last night. You said in saying Carmen Reinhart was a little more graceful and Mr. Gorman finessed it with fear and greed. What do the investors of Bridgewater do? How do institutional investors respond when they hear that on Bloomberg Surveillance?
Well, look, I mean, Bridgewater's an incredible firm, what they've built, and they have many different views within the firm, and it's really a systematic investing strategy. So if they go on TV and say one thing, that's not necessarily how they're implementing their strategy. But at the same time, it's really shocking that because we've been through several periods, wherever we have a downturn, central banks respond, they elevate asset prices, that you would then take that to the conclusion that we're not going to have boom-bust cycles anymore is somewhat stunning, because we all know if we end up in bubbles, whether they're in commercial real estate, corporate credit, or equities, the downturn will be that much more severe.
Well, it's the financial dislocation that I think is important here. But allow me to take the other side of this, just for the purpose of this conversation. When Bob Prince talks about central banks being boxed in, just this thought that if they ease, they can't stimulate the economy anymore. But they can't tighten because you see what happens almost immediately. So we're just stuck with stagnation and things go nowhere. You're a little bit more sympathetic with that view of the world.
100%. Yeah, I mean, central banks have been boxed in for quite some time. I mean, it was actually funny when you read the ECB's comments about how they're going to maintain QE until they start raising rates. When is that going to be? When I collect Social Security? I mean, come on. Like, the soonest the Fed is going to hike is Q1 of 2021, and the ECB would probably be 5 years behind that.
You hold your fancy conference, which I'm not invited to. I understand.
Come on, Tom, you got
2 and 20, and it's coming down and all that. How does alternative investment add alpha, add value, add dollars to a portfolio with this leaden state, with this new low volatility?
So we think right now the key in our business is to try to be a true alternative to equities and fixed income. We've said for
what are you doing? Oriental carpets?
Maybe that's next year's trade. But the point is we've said for the past years the only way to keep up with equities is to be 100% long equities. The only way to outperform is to be levered long. So how can you add value? You can add value by outperforming fixed income and having a low beta to equities. So if we can grind out mid to high single digits and have much less downside, which
sounds like what Bob Prince said yesterday,
which are fairly he's a smart guy. Most of what he says.
How do you do that in fixed income?
Yes, well, we're focused still on multifamily CMBS and RMBS and the mezzanine part of the capital structure. And so the beauty there is if we have a downturn, you have far less downside than real estate equity investors, but you still have reasonable return in the meanwhile.
Okay, mezzanine this, mezzanine that. They're looking at their portfolios going, how much Apple do you own?
Well, Apple's easy to own, right? You certainly don't need to pay anyone any money to own Apple or Google or to own the S&P, right? So
you want to earn the fee.
You want to add value, right? And unless you think, again, if you think boom-bust cycles are completely over, go 100% long equities, be levered long equities, but eventually you're going to pay the price. In the meanwhile, most investors do have fixed income, and that's going to continue to be very return challenged given how low rates are. So that's what we're really focused on, being more of a replacement for fixed income than a replacement for equities.
This conversation's gotten too fancy for me. I mean,
Come on,
John, help me out here.
We didn't talk about Gamma or Delta.
We welcome you on Bloomberg Radio, Bloomberg Television, to Pharaoh's The Real Yield. It's an early edition.
Oh,
Go.
thank you for the plug. 2016, when we sat in these chairs in Davos, Switzerland, there were some real concerns about the economy. This time 12 months ago, some similar concerns as well. It's not certainly January 16, January 19. This reminds a lot of people of January 18.
Yes, correct.
That resonate with you?
It's not quite as bullish. I mean, when you came into January 18, you had just outright euphoria over tax reform, right? And even though the Fed was tightening, you had equities get to 18.5 times forward earnings. So we think that scenario or that time, it was much more euphoric. Now it's more of a recognition that recession risk has gone down. U.S. consumers in very good shape. Donald Trump is almost a shoe-in to be reelected. And so when people look at risks, it's like, what's the risk? What's the risk? And in the background, you have the Fed. That's why, again, many think markets will continue to trend higher.
What will be the hedge fund strategy that will make people look good over the next 12 months? There's a raging debate on this.
Yeah, well, look, I think
short.
It's not long short still, because even though there have been several periods in the post-crisis where there has been alpha added, the problem is once you subtract fees and expenses, even 1 in 10, right? Even if you make 10% from beta, another 100
leaden environment.
Yeah, 100
So which
basis
one's going to
points.
work? Just because we're going to be out of time.
So we still think structured credit looks very attractive. Again, if you're trying to make a mid to high single digit return, because the fundamentals of consumer credit and housing credit continue to improve, and the fundamentals of regional
Tesla made
banks.
high single digit return in
Have you
what,
seen
12 days?
In 12 minutes.
Before you go, the 60 seconds we have left, as a market participant, leaving a World Economic Forum in the next 24 hours, number one takeaway?
I think the number one takeaway is that if you're holding your breath for Europe to restructure itself and become more competitive with the United States, you're going to hold your breath for a very long time.
Troy Gursky of Skybridge Capital.
Great to see you guys.
Great to see you here in Davos, Switzerland. So much more coming up on the program in the next hour.
Invite to the wine party.
Are you upset about that?
Next year, gentlemen.
Look how upset Tom's face is. Tom, put out a picture for our listeners on radio just to see these tears.
Anthony puts out the bottle of Boone's Farm for me, and we move on from there.
Coming up on the program, the NICE President Stacey Cunningham and Goldman Sachs Chairman and CEO David Solomon. Conversations you don't want to miss. And we'll take a little look at that news conference with Christine Lagarde in Frankfurt, Germany. From Davos, Switzerland at the World Economic Forum. For our audience worldwide, this is Bloomberg.
Why has
Keys. Check. Phone. Check. 70s playlist downloaded? Check. Nice. There's one more thing you should check before you leave. Your travel. There's a new cycleway under construction between Kensington Olympia and Brentford Town Centre, so expect delays due to lane closures at the junction of Kew Bridge Road and Chiswick High Road. Plan ahead at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
Ah, finally another commercial, said no one ever. Visit tunein.com/premium to upgrade now and get over 45 commercial-free music stations.
You might already know that TuneIn allows you to listen to all the pro sports leagues wherever you go. But did you know TuneIn is also home to the wide world of college sports?
Open three, DeAndre Hunter got it! Hand off Carruthers, big hole right side. He leaps and he surges in, touchdown!
From live college football, basketball, and baseball games to podcasts and coaches shows fueling your love for the game in your school. And the best part is, it's all free. Search college sports to find your team or league.
On this week's On the Media, we peel away the many layers of the Warren Sanders sexism sideshow.
The first layer is, can we acknowledge that in a country that has only elected male presidents throughout its history, that gender is a factor?
Also, depressed by politics? We have a plan for that. Listen to On the Media from WNYC. Listen to the On the Media podcast on TuneIn today.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn. When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip
Follow
Bayless.
at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
Pascal gobbles up the rebound and slams it down.
Catch your favorite NBA team right here on TuneIn.
A step back, deep three is up and in.
Search NBA on TuneIn and hear all the action. The NBA lives on TuneIn.
Reported fourth quarter profit that topped analyst estimates after adding 442,000 internet subscribers, a 26% increase from a year ago. That blew past analyst projections. When you hear the name Rolls-Royce, you probably think of a very high-end automobile, but the company also makes jet engines. Now its CEO is warning that the aviation industry faces a damaging backlash from the public and regulators if it fails to step up efforts to slash carbon emissions. Stock futures are narrowly mixed this morning. S&P futures down 4, Dow futures are down 56. NASDAQ futures were up slightly. Now they are little changed. The Dow and the S&P 500 closed mainly flat yesterday. The NASDAQ rose just over 0.1% amid lingering concerns that a virus spreading from China to other countries could weigh on global growth. Gina Cervetti, Bloomberg Radio.
If you promise to cover the latest financial and business news from Asia,
we're talking about social enterprises in Asian countries
with expert analysts who really understand Asia.
Aren't you encouraged with respect to U.S.-China trade?
Then you must be us.
Tell us about the trend within this part of the world.
Bloomberg Daybreak Asia.
What sort of fiscal stimulus do you think we'll see?
Tonight at 6 Eastern on Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening. We have to get it right the first time.
We always talk about the losers in a trade war.
You benefit if you're just further away from China.
So that you can too.
What are the ramifications if she crumbles or doesn't crumble?
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio.
Good morning, everyone. From the World Economic Forum meetings in Davos, Switzerland, these important meetings, John Farrow and Tom Keene, an eventful set of hours of Bloomberg surveillance, and then on to John Farrow's The Open. Good conversations today on all of the issues expected, and of course, many other issues that have been a surprise in the last 24 hours. John, what's the biggest surprise for you in these meetings?
How warm it is. I said it yesterday, I'll say it again. Tom's going to stay with us a little bit longer.
Our weather report with John Farrow.
As well. It's a little bit warmer. We get an extra hour with you too. So Tom and myself will be sitting down with the Goldman Sachs CEO a little bit later, David Solomon. In the next part of this conversation, in around about 15 minutes time, we'll talk to the New York Stock Exchange President, Stacey Cunningham, as well. So some brilliant interviews coming up through the day. Front and center though, Tom, just this conversation about where we are in the cycle and where this market's heading.
This was a surprise, and it began yesterday with John's important question to Bob Prince, and then we followed on with James Gorman and others about the theory underpinning this great bull market folded back into the economics, and we're going to get an economic update here from Christine Lagarde.
We are. In around about 29 minutes time, we'll head over to Frankfurt, Germany, and bring you just a little bit of our news conference with the ECB president to get you in touch with the price action worldwide cross-asset. This is how things are shaping up around about 90 minutes away from the cash open in New York City. The pain, the epicenter of it, over in Asia, Chinese equity markets down around about 3%. The concern, of course, around the spreading of this virus and some of the cities ultimately shutting down for travel. We're talking about cities with a population bigger than London, bigger than New York, 10, 11 million people. No carry through almost whatsoever into the US session. Equity futures down 1/10%. In the bond market, yields down 2 basis points. 175 is your yield.
Yeah.
And euro dollar, Tom, going into that news conference with Christine Lagarde, 110.86.
And this data board's nuance, as John mentioned, yields are down. A 2-year I noticed coming down to way back months lows as well. In oil breaking yesterday as well. West Texas Intermediate there under $56 a barrel. We welcome all of you on Bloomberg Radio, Bloomberg Television worldwide. And right now, particularly for the American audience, we need to get smarter after we heard from the President of the United States yesterday on trade. We caught up earlier with the Dutch Prime Minister, Mark Rutte. Let's listen.
One of the consistently successful things we are dealing with as the European Union is trade. And we have to work with one voice. We are doing that also with the UK when they are leaving from next week onwards. We have to create a new trade deal. So I'm optimistic about it because we know what is important for Trump. We know what is important for Europe. And we are both pragmatical.
Joining us now for an exclusive interview, another view from a head of state from Europe. It is Kyriakos Mitsotakis, the Greek Prime Minister. Fantastic to see you, Prime Minister.
Oh, thank you for having me.
Let's talk about it. We'll start with trade. We'll get to the markets, and I know you've got a lot to say on it. Are you as pragmatic as the Dutch Prime Minister about dealing with the United States and ultimately coming to some kind of trade truce?
Yes, I am, and I was happy to hear the comments made by the U.S. President here in Davos that he is looking to have a quick negotiation with Europe to conclude a trade deal as soon as possible. I heard the President of the Commission, who we should inform the U.S. public is negotiating on behalf of all European countries, say that we could get a deal done in weeks. I don't know if it's going to be weeks or months, but I think that the ingredients are here for a deal that's going to be a win-win solution.
Well,
for
let's
both
compare
blocks.
and contrast the comments on Tuesday from the administration, softer, Wednesday a whole lot harder. Not just from the President, who basically said that Europe in some ways is worse than China on trade, but also from the Secretary Stephen Mnuchin of the Treasury, essentially saying that if you arbitrarily put a tax on digital companies, we'll arbitrarily put them on auto companies as well. I just wonder, your take, whether some European officials are being slightly naive about what could be coming down the road towards them a little bit later this year.
Well, I'm fully aware that this is not going to be an easy negotiation, but I still believe that it is in the interest of both trading blocs to reach an agreement as soon as possible. And I think as we also enter an electoral year in the U.S., and to the extent that trade seems to be the major concern as far as global growth is concerned, I think that we see the world through, I think, a relatively similar prism, and I think that an agreement will be reached.
But this is important. There's been bonds broken with China, but China is distant and very much on the other side of the world. There are many relationships here. Just as an example, Matthew Prince of Cloudflare, of course, making a huge splash in Davos with his new piano bar, married at Mykonos. We had a surveillance wedding.
Promoting a piano bar?
No, I'm promoting tourism.
You're promoting marriages in Mykonos.
No, I'm promoting tourism,
Mykonos,
but tourism. Wait, I'm promoting tourism among all these nations in a much closer link across the Atlantic than in China. We had a surveillance wedding in Greece that we all survived over the last 18 months as well. Do we risk, Prime Minister, breaking those cultural and social relationships with a trade war with America?
That is why I was always very concerned about this issue, and that's why I remain cautiously optimistic. I studied in the U.S. I know the U.S. very well, and I'm fully aware that what unites us goes beyond common economic interests. There is a bond of fundamental values of democracies. I mean, Greece. Look at Greece. We'll be celebrating 200 years since our War of Independence in 1821, a war that was inspired by the founding fathers. So let's look at the big picture. Understand what unites us is much more than what separates us. And if we have to both back off a little bit from maximalistic
do you
approach,
sense that from the President of the United States? Is he being too adversarial in initiating these discussions?
Look, when I saw him at the White House, I encouraged him to get a deal done with Europe. And again, I will, I listened to his comments here in Davos, and I think the general perception is that we're in a good path.
Well, let's talk about the perception of Europe, politically speaking. I live in New York alongside Tom. We used to live in the same building as well. We don't.
We're not in speaking terms anymore, so it doesn't work.
We'll move on from that very quickly.
No marriage.
I will say, though, I hope not. I will say, though, that the perception of Europe is that it's full of socialists. It's full of left-wing politicians.
That's very wrong.
And we're going to get to that in a moment. It's full of left-wing politicians that don't want to do business, are only interested in barriers to entry, and put put in a big brick rule around the bloc. Centre-right politics, the future of that in Europe. What is it?
We won on a centre-right agenda.
Yep.
Liberal reforms, reducing taxes, deregulation, an inclusive economy. We got 40%. We have an absolute majority. We beat the populists of the left and the right at their own game. And I think this sends a very positive signal that traditional centre-right parties in Europe, provided they have the right agenda, can actually win elections. They can beat the populists and certainly can beat the rhetoric of the left, which in Greece essentially led us to a second crisis.
In my many conversations with Greek leadership of another time and place pre-crisis, there was a belief that if Greece could right its ship, the money would come back from those abroad of Greece. Is that occurring? Do you see a new confidence where the money's actually coming back to Greece?
It is coming back. It's coming back by Greeks who live abroad. It's coming back by Greeks who've decided to invest in Greece, but it's also coming from foreign investors who for the first time look at Greece and say, hey, we have a convincing investment thesis here. And as you know, markets have been very good with Greece since we got elected. Look at our bond yields.
Excuse me, they've not been very good. They've been a miracle. Our Matthew Winkler has documented.
I believe
it is a miracle,
175 on 10s, I believe, at the moment, just as we speak.
Actually, probably lower than that. But lower than Italy on many days. But it does make sense. We have a stable government. We don't have elections for 3.5 years. We have an absolute majority. We're delivering on real reforms, so why wouldn't it happen?
The fast money's come back, and I overheard a brief conversation that I'm sure you won't mind me sharing. An investor saying to you, you are a legend of the hedge fund community.
Well, that's kind of them to say.
Best performing equity market in the world, I believe, last year. Fantastic amount of money. But the conviction level to put money into a market is a whole lot lower than it takes to put money into the ground, to build a factory, and to start investing in the country.
That's why we focus so much on deregulation, on addressing issues such as bureaucracy, licensing. If you look at, for example, what's happening in real estate is real money on the ground. Real estate prices are up by 11% in 2019. I expect a similar trend in 2020. You look at big emblematic investments, such as the old airport in Ellinikon, it's been unblocked. So what I find very interesting is that real companies are putting real money on the ground. Some of the big tech companies in the U.S. are interested in Greece. We have Pfizer setting up an AI center in Greece, just taking advantage of the incredible amount of talent that we have in the country. So this is not just about tourism. It's not just about the sun or the beaches. It's about, a country that is moving out of a crisis at a very fast pace.
You got some big targets, 100 billion euros of direct investment.
Well, that is the maximum we can get.
But let's talk about time frame. How quickly do you think you can get that kind of investment into the country?
We need that over 7 to 8 years, but we still have a significant capital gap to bridge, and that is my main concern, how to get foreign direct investment in the country. It is already happening. It will continue to happen for 2020, and I'm quite optimistic about it.
Prime Minister, the time that we have left with you, your family is the one of the heritage of Greece well back into the 20th century. You have seen many Turkeys to the east. Explain to us now how you perceive the new Mr. Erdogan. It's been a changed Erdogan since 2002. How do you perceive Turkey to the east?
Look, Turkey has been difficult to deal with. We've honestly said that we want a good and constructive relationship with Turkey, but overall the behavior of Turkey has been on the very aggressive side. They signed a deal with Libya, which is completely unacceptable to Greece regarding the delimitation of maritime zones. It's an illegal deal. That's what the European Union said. That's what the US said. So there's a constant state of provocation that I think will lead Turkey nowhere. We want to engage with Turkey on issues such as migration, which is a big challenge for us.
How do you do that when they have so many refugees and there's always this threat that they're just going to open the door and let them all pour into the European
Well, first of all, you can't deal with refugees by using desperate people as a geopolitical wedge.
Is that what the Turkish are doing?
Well, that's what they've implied. I'm not saying they're doing it, but I'm also saying at the same time that we have an agreement as a European Union with Turkey. It can work well. It has worked well in the past. We need to stick to it. We need to update it. And we need to decouple migration from the other issues that we have. And I think we can do that.
Mr. Prime Minister, thank you so much.
Thank you.
I'm thinking, Athens in February and maybe a little later.
No, let's go a little bit later.
You're making a mistake because we want to extend the season.
Okay.
It's a lovely time to come in Athens in the winter or in the spring or in the fall. You don't all need to come in July and August. It's actually very crowded.
He sounds like the mayor of Venice.
The Prime Minister.
Don't all come together, please. Thank you so much.
Mr. Players, don't get up yet, Mr. Players. So let us finish
Mr. Takis, thank you very much. We've got some breaking news, and we need to get you up to speed on the news elsewhere as well. Let's cross back over for some first word news. Here's Bloomberg's Lisa Brownwitz.
Thank you so much, John and Tom. Let's start with the news that broke just minutes ago. Singapore has confirmed its first case of the deadly respiratory virus that began in China, this according to CNA reports. Meanwhile, China ramping up efforts to contain the virus. The city at the center of the outbreak, Wuhan, has suspended outbound flights and rail service. It also stopped travel by bus, subway, and ferry. Meanwhile, Chinese media say the government has canceled large-scale events, including upcoming Lunar New Year celebrations. It's day 2 of the Democrats' attempt to convince the Senate to remove President Trump from office. House Intelligence Chair Adam Schiff was the lead prosecutor at the impeachment trial.
Should the Congress just get over it? Should the American people just come to expect that our presidents will corruptly abuse their office to seek the help of a foreign power to cheat in our elections? Should we just get over it?
The Democrats get 24 hours over 3 days to make their case. The president's lawyers will begin their arguments on Saturday. The U.S. is stepping up pressure on South Korea. It's warning it will send layoff notices to almost 9,000 South Korean workers at U.S. bases there. That's if South Korea doesn't agree to pay more for American forces. President Trump wants to bill Seoul more than 5 times as much. And the UK is a step closer to leaving the European Union. Parliament has approved Prime Minister Boris Johnson's Brexit deal, and it now goes to the Queen for her signature. Then the agreement will be formally ratified by the European Parliament. All that sets up a transition period for the UK that will last till the end of the year. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Abramowitz. This is Bloomberg. Back to you with your travel plans for Europe, Tom and John.
You got it right. John's on his cell phone right now, Lisa, looking up Mykonos in May.
Just booking a flight.
We will see as well.
Are you okay flying coach?
I don't know about that.
Okay.
Someone who took the Gulf Stream over. I didn't. Yes, you did take the Gulf Stream over, and I did. Now, we're going to continue here. Of course, David Solomon, Goldman Sachs, with us as well. And this is an important conversation. Stacey Cunningham will join us with the New York Stock Exchange, their president. That will be most timely about the actual transactions that are done on global Wall Street. The ECB and Madame Lagarde, we do that later. From the meetings of the World Economic Forum in Davos, this is Bloomberg.
Rich is just a really good guy. The term good egg isn't enough to describe him. He's also certified organic and free range. Rich puts the cap back on everything. The toothpaste, the olive oil, the shampoo, everything. He lets his 10-year-old nephew beat him at virtual tennis, even though he can straight up slay his 10-year-old nephew in virtual tennis. When the toilet paper is running low, Rich replaces the roll on the actual holder, not just on the back of the toilet. Rich is texting and driving. Rich? No. What are you doing, Rich? I was just telling everyone how great you are. Texting and driving makes good people look bad. Visit StopTextStopWrecks.org. A public service announcement brought to you by the National Highway Traffic Safety Administration and the Ad Council.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their business strategically. Yet, the most competitive managers in the market know, with the right partner and a flexible operating platform, you can. Go boldly toward change with SEI Investment Manager Services.
Determination and operational strength are both essential factors for growth in asset management. I'm Steve Meyer, President and Head of SEI's Investment Manager Services Division. We know that disruptive forces create opportunities around the world. If you see potential in change, our industry specialists will maximize SEI's integrated platform of data and risk management, global investment operations, compliance support, and investor services to position your asset management business for success. Come grow with us.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seizechange.
Let's get this right, sir. You didn't see 3 men dressed as clowns take off in a van with a Renaissance painting because you were distracted by, and I quote, a sporty red compact SUV with a bold mesh grille, a sculpted bonnet with sweeping roofline on diamond-cut alloys.
And beautiful rear haunches.
So, you saw a Jaguar E-Pace. But what about the clowns?
What clowns?
Jaguar E-Pace, designed to steal attention. Search Jaguar E-Pace.
Line with the statement of Ray Dalio that cash is trash and all risk assets are going up. You step back and you wonder if when the bearish guys, Bridgewater's been very bearish, start to get that bullish, it could be a dangerous development.
Troy Gairsky of Skybridge just moments ago right here on Bloomberg Surveillance. For our audience worldwide, it's been a massive conversation. Where are we in this cycle, and is there too much risk being taken in this market?
And the efficient frontier, the idea of bonds up, yield down, stocks up together with that has really led to a theory debate and also a tactical, I didn't expect this at Davos, a practical debate about what to do and how to, as a general statement, hedge your exposure. That's new this year.
I'm looking forward to the conversation in around about an hour from now. We'll bring you some of that news conference with ECB President Christine Lagarde. Then after that, David Solomon of Goldman Sachs, the CEO. Really looking forward to that conversation, Tom.
It's really, really interesting. And of course, to move here to one of the debates, and it's on the machinery of the markets and bid and ask and the New York Stock Exchange. Forget about that. This is one of the great stories of the World Economic Forum, and I would say American finance. This is what you do when you're an industrial engineer out of Lehigh and you land the coveted job. Everybody, it's like being a page in Washington. To be an intern on the floor of the New York Stock Exchange was the dream job not that many years ago. Stacey Cunningham joins us. She's gone a little bit better than internship as president of the New York Stock Exchange. We are thrilled to have you here.
Thanks, Tom. It was the American dream.
It was when you were a kid in a financial family, that was like, because what was it like the first day when you were an intern on the floor of the exchange?
I actually, before I walked onto the stock exchange floor, I never thought about finance. It wasn't something I wanted to do. But those first minutes, the first 15 minutes, I knew it was what I wanted to do with my life. I loved it. I loved the pace. And I love the energy, and I love what capitalism delivers for this country, and I think that's what we should be talking about, because I think that's where we need a little bit of a tune-up.
Do you think anyone is defending capitalism at this conference?
Well, no, and that's the point. I think what I'm hearing at this conference is we have to tell our stories better, and I think capitalism is not immune from that, right? Capitalism has been the engine that has been the growth of the, really fueling the growth of the United States, but it needs a tune-up. We need to make sure that the American dream is a story of shared success, and so we got to get companies out from private to public sooner so that others can share in their wealth creation, and we need to talk about the good that those companies are doing by creating jobs and giving back to their communities.
One of the great voices of the NYSE is a guy named Ken Polcari. He's been great, loyal, visible, smart on the markets. Great. He and I remember another time. Is the New York Stock Exchange of today anything like what you knew as an intern, and where's it going to be in 5 years?
Yeah, we kept the best parts of New York Stock Exchange, and we brought together modernization where we could automate the parts that really just should be automated. And so we really believe strongly that the combination of people and technology is so much more powerful.
Are you keeping Arthur Levitt happy with best price?
Yes, yes.
Explain that for our audience. The folks on radio and television, this is wicked important. You hear Arthur Levitt, the former chairman of the SEC, with us on Bloomberg Surveillance, and he's always talking about the execution. Explain why the execution now is different than before Ken Polcari had a beard.
One of the things that you want to make sure is that when somebody wants to buy or sell a stock, they can go out and see what is the value. And nothing values a company better than the public markets. But price is an important part of that. And so the exchanges are the ones that set that price. And even though market trading has changed and 40% of the market is trading in dark and not contributing to that price, they're actually taking those prices that the exchanges set to determine where to trade. And those are the same exact prices that a retail investor logging into their Fidelity, E-Trade, and Ameritrade.
You just slipped through trading in the dark.
Yeah.
Do you trade in the dark?
What is trading in the dark? That's jargon. We don't do jargon here.
So what that is if you are showing your prices to the world to see, so that when someone logs into their online trading account or calls their broker on their Bloomberg terminal and they get their prices, their Bloomberg terminal is showing the best price in the market.
Stacey, you're making the argument that companies should stop staying in private markets for so long and come public.
Yes.
A lot of people would understand that argument coming from you. Why? And why are direct listings going to be such an important part of this process?
So the two great questions. The first one is, why should they be public sooner? And there are a lot of conversations around why they're staying private longer. And you can talk about that. It's capital, it's regulation, it's all these things. But with the downsides to the fact that they're staying private means there's less discipline and governance in companies, which at a much larger company that's much more impactful. There's less clarity around valuation. So are these companies worth what the private markets are saying? Or do you need the wisdom and the disclosures and transparency of the public markets to determine that? And it's creating a bifurcation of wealth.
Let's talk about pressure, the pressure on you guys at the moment. We've had the likes of Larry Fink of BlackRock talk about leaning on the active management world to lean out of some companies, let's say in coal. The pressure really is going to have to be put on the index providers to say to them, you need to get these companies out of the index. That's going to make the most difference. The pressure is also going to be on the exchanges. Why allow these companies to list on your exchange?
I think it's really important to make sure that investors have access to opportunities and the right to choose. And so by putting them on exchanges and giving them information about their disclosures is helpful for they can make informed decisions. I think it's really important to recognize what the conversations I've been having here in Davos over the past few days are from many CEOs who are saying we've been doing all of the work around ESG already because it's important to our employees. It's important to our customers that we take a stand on these issues, even more so than their investors.
So Stacey, let me ask you this, because I imagine it's come up multiple times, not just at this conference, but over the last few months, maybe the last few years as well. You have minimum standards to be listed on the New York Stock Exchange, minimum market cap, minimum amount of shareholders as well. Why not have ESG as part of that?
Because our standards are very focused on investor protections. And if those companies stay private, the conversations we're having are really connected, right? If we put so many standards around requirements for companies to be public, they have alternatives. It's a different dynamic than it was years ago when you actually had to come to the public markets to get money. Because there is money available in the private market space, we don't want investors to be denied those opportunities entirely.
This is not your remit, but I want your opinion on this because it's important. Faro has just recovered from the shock of losing that much money on his 8,000 shares of Uber that he bought.
Don't listen to this.
How do you respond when on your floor they do the song and dance of an IPO or even a secondary, but particularly initial public offerings, and they come out and they do the whole modern media dance and the thing goes down X%? That's not good for the brand, is it?
I think we should keep in mind that in a large IPO like that, they sold $8 billion worth of stock, and it opened at a price and stayed right there. Now, over time, investors were reacting to the valuation of companies, and as companies go public,
your job is to get it open in the early minutes.
And to make sure that investors have the information.
Did they have the information on those transactions?
Yes, and you'll see it's a great example of private valuations versus public valuations. And so we need to actually make sure companies get out. And this shift, because they don't need capital, is actually why the direct listing was an innovation that we delivered this year, because it's actually not about raising money. It's about, in those cases.
Stacey, you're nailing. There's a private valuation. They go public in selected stocks. Tank. Whose responsibility is that? It's not you. Who is it? Who's responsible?
I think investors are asking questions that they weren't asking before, and I think that's what you're going to see in 2020, is that investors are asking about profitability and valuations. And when you have limited people participating in the private space, you're limiting access to opportunity, and you're also limiting access to information.
Stacey, fantastic conversation.
One of my kids needs a job as an intern this summer. Can we work on that?
He's looking for work. Stacey Cunningham, NYSE President, thank you very much. Up next on the program, ECB President Christine Lagarde from Frankfurt, Germany. From Davos, Switzerland, this is Bloomberg.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
Why is delivering the best client experience a top priority at BNY Mellon's Pershing? Michelle Feinstein, Director of Client Engagement, explains.
Today's investors want a financial relationship that's on demand, customized, and leverages the latest digital technology. At BNY Mellon's Pershing, helping advisory firms and broker-dealers create great experiences for their clients is our priority. Through our integrated wealth experience, we give you a high-touch service, flexible technology choices, and expert insights, so you can deliver a highly personalized experience to your clients at every step, from onboarding to wealth planning, to performance analysis and more. And because we're part of BNY Mellon, you'll benefit from more than 230 years of strength and stability. At Pershing, we're personally invested in your success.
Visit Pershing.com to learn more about Pershing's integrated wealth experience. Pershing LLC and Pershing Advisor Solutions LLC are both members of FINRA and SIPC.
This is a Bloomberg Money Minute.
Keys. Check. Phone. Check. 70s playlist downloaded? Check. Nice. There's one more thing you should check before you leave. Your travel. There's a new cycleway under construction between Kensington Olympia and Brentford Town Centre, so expect delays due to lane closures at the junction of Kew Bridge Road and Chiswick High Road. Plan ahead at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip
Follow
Bayless.
and TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
Ah, finally another commercial, said no one ever. Visit TuneIn.com/premium to upgrade now and get over 45 commercial-free music stations.
Years ago, the book The New Jim Crow helped ignite a movement against mass incarceration. This week on the New Yorker Radio Hour, I'll talk with the author, Michelle Alexander.
Millions of people have been relegated to a permanent second-class status. It wasn't a message people were eager to hear, but I think it is today easier to see.
Listen to this episode of the New Yorker Radio Hour on TuneIn today.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
A break in Davos, Switzerland, at the World Economic Forum. Attention turning to Frankfurt, Germany, as we await the ECB President Christine Lagarde to deliver her news conference. Here's your price action ahead of all of that. Let's get you set up, shall we? 60 minutes out from the equity cash open in New York City. Equity futures down just around about 0.2%. Euro dollar going nowhere, 110.90 on the bond market in the 10-year part of the Treasury curve. Yields come down 3 basis points to 173. Tom, we've been talking about it through the day. Some real concern over what is happening in China, how it's spreading, and the coronavirus and the damage being done. Cities as big as 10 million, 11 million people just totally shutting down. That's hitting Asian equities. It is not hitting equities in the United States.
And we see the symbolism on Bloomberg Television. Good morning on Bloomberg Radio worldwide is in Frankfurt, Germany. Christine Lagarde, is this press conference due, as they say?
I think it is.
It is very good.
I think it is. Are you counting? ECB President Christine Lagarde walking into the room over in Frankfurt, Germany. We might hear a little bit more about the strategic review of the ECB. Fascinating that's happening at almost exactly the same time it's happening at the Federal Reserve, Tom.
Most interesting nuance here, and I wonder if she's been listening to the conversations in Davos. She's very astute about that.
I wonder if she has.
Listening to the pulse.
Have you seen what's happening next to me? Tom Keane, without a jacket, in Davos.
This is the second time in 16 years.
For our listeners on radio, I will tweet this picture out. Absolutely unbelievable. No jacket.
You know
for
what?
The first time in how many years?
For those of you
what's this made of?
This is. I don't know. It's a carpet from somewhere. Somebody calls this my Kudlow suit because it's one of the few suits I have
will
with
be,
stripes. But
I don't
Lawrence,
be impressed. that's what you're calling
but
this.
But the ever-dapper Kudlow over at CNBC years ago would wear the
He
big
used to
wide
wear that.
striped suits.
It feels like a cop.
I don't know. I think that bill right here.
Let's head over to Frankfurt, Germany, shall we? Here's the ECB President, Christine Lagarde. Let's take a listen.
In 2020. And it's going to be a busy year for us. So, ladies and gentlemen, the Vice President and I are very pleased to welcome you to our press conference. We will now report on the outcome of today's meeting of the Governing Council. Based on our regular economic and monetary analysis, we decided to keep the ECB interest rates unchanged. We expect them to remain at their present or lower levels until we have seen the inflation outlook robustly converge to a level sufficiently close to, but below 2% within our projection horizon. And such convergence has been consistently reflected in underlying inflation dynamics. We will continue to make net purchases under our asset purchase program at a monthly pace of 20 billion euros. We expect them to run for as long as necessary to reinforce the accommodative impact of our policy rates and to end shortly before we start raising the key ECB interest rates. We also intend to continue reinvesting in full the principal payments from maturing securities purchased under the APP for an extended period of time past the date when we start raising the key ECB interest rates, and in any case for as long as necessary to maintain favourable liquidity conditions and an ample degree of monetary accommodation. Today, the Governing Council also decided to launch a review of the ECB's monetary policy strategy. Further details about the scope and timetable of the review will be published in a press release that will come out at 3:30. The incoming data since our last meeting are in line with our baseline scenario of ongoing but moderate growth of the euro area economy. In particular, the weakness in the manufacturing sector remains a drag on euro area growth momentum. However, ongoing, albeit decelerating, employment growth and increasing wages continue to support the resilience of the euro area economy. While inflation developments remain subdued overall, there are some signs of a moderate increase in underlying inflation in line with expectations. The unfolding monetary policy measures are underpinning favourable financing conditions for all sectors of the economy. In particular, easier borrowing conditions for firms and households are supporting consumer spending and business investment. This will sustain the euro area expansion, the build-up of domestic price pressures, and thus the robust convergence of inflation to our medium-term aim. At the same time, in light of the continued subdued inflation outlook, monetary policy has to remain highly accommodative for a prolonged period of time to support underlying inflation pressures and headline inflation developments over the medium term. We will therefore closely monitor inflation developments and the impact of the unfolding monetary policy measures on the economy. Our forward guidance will ensure that financial conditions adjust in accordance with changes to the inflation outlook. In any case, the Governing Council stands ready to adjust all of its instruments as appropriate to ensure that inflation moves towards its aim in a sustained manner in line with its commitment to symmetry. Let me now explain our assessment in greater details, starting with the economic analysis. Euro area real GDP increased by 0.3% quarter-on-quarter in the third quarter of 2019, following growth of 0.2% in the second quarter. The pattern of moderate growth reflects the ongoing weakness of international trade in an environment of continued global uncertainties, which has particularly affected the euro area manufacturing sector and has also dampened investment growth. At the same time, the services and construction sectors remain more resilient, despite some moderation in the latter half of 2019. Incoming economic data and survey information point to some stabilization in euro area growth dynamics, with near-term growth expected to be similar to rates observed in previous quarters. Looking ahead, the euro area expansion will continue to be supported by favorable financing conditions, further employment gains in conjunction with rising wages, the mildly expansionary euro area fiscal stance, and the ongoing, albeit somewhat slower, growth in global activity. The risks surrounding the euro area growth outlook related to geopolitical factors, rising protectionism, and vulnerabilities in emerging markets remain tilted to the downside, but have become less pronounced as some of the uncertainty surrounding international trade is receding. Euro area annual HICP inflation increased by 1.3% in December 2019 from 1% in November 2019, reflecting mainly higher energy price inflation. On the basis of current futures prices for oil, headline inflation is likely to hover around current levels in the coming months. While indicators of inflation expectations remain at low levels, recently they have either stabilized or ticked up slightly. Measures of underlying inflation have remained generally muted, although there are further indications of a moderate increase in line with previous expectations. While labor cost pressures have strengthened amid tighter labor markets, the weaker growth momentum is delaying their pass through to inflation. Over the medium term, inflation is expected to increase, supported by our monetary policy measures, the ongoing economic expansion, and solid wage growth. Turning now to the monetary analysis, broad money, M3, growth stood at 5.6% in November 2019, broadly unchanged since August. Sustained rates of broad money growth reflect ongoing bank credit creation for the private sector and low opportunity costs of holding M3 relative to other financial instruments. The narrow monetary aggregate M1 continues to be the main contributor to broad money growth on the components side. The growth of loans to firms and households remained solid, benefiting from the ongoing support provided by our accommodative monetary policy stance, which is reflected in very low bank lending rates. While the annual growth rate of loans to households remained unchanged from October at 3.5% in November, the annual growth rate of loans to non-financial corporations moderated slightly to 3.4% in November from 3.8% in October, likely reflecting some lagged reaction to the past weakening of the economy. These developments are also visible in the results of the Euro Area Bank Lending Survey for the fourth quarter of 2019, which indicate weakening demand for loans to firms, while demand for loans to households for house purchase continued to increase. However, credit standards for both loans to firms and loans to households for house purchase remained broadly unchanged, pointing to still favorable credit supply conditions. Overall, our accommodative monetary policy stance will help to safeguard very favorable bank lending conditions and will continue to support access to financing across all economic sectors, and in particular for small and medium-sized enterprises. To sum up, a cross-check of the outcome of the economic analysis with the signals coming from the monetary analysis confirm that an ample degree of monetary accommodation is still necessary for the continued robust convergence of inflation to levels that are below but close to 2% over the medium term. In order to reap the full benefits from our monetary policy measures, other policy areas must contribute more decisively to raising the longer-term growth potential, supporting aggregate demand at the current juncture, and reducing vulnerabilities. The implementation of structural policies in euro area countries needs to be substantially stepped up to boost euro area productivity and growth potential, reduce structural unemployment, and increase resilience. The 2019 country-specific recommendations should serve as the relevant signpost. Regarding fiscal policies, the euro area fiscal stance is expected to continue to provide some support to economic activity. In view of the weak economic outlook, the Governing Council welcomes the Eurogroup's call in December for differentiated fiscal responses and its readiness to coordinate. Governments with fiscal space should be ready to act in an effective and timely manner. In countries where public debt is high, governments need to pursue prudent policies and meet structural balance targets, which will create the conditions for automatic stabilizers to operate freely. All countries should intensify their efforts to achieve a more growth-friendly composition of public finance. Likewise, the transparent and consistent implementation of the European Union's fiscal and economic governance framework over time and across countries remains essential to bolster the resilience of the euro area economy. Improving the functioning of economic and monetary union remains a priority. The Governing Council welcomes the ongoing work and urges further specific and decisive steps to complete the banking union and the capital market union. We are now ready and available to take your questions. Thank you.
Mr. Arnold.
Good afternoon.
Live for our audience worldwide on Bloomberg Radio, you are listening to the ECB President Christine Lagarde at a news conference in Frankfurt, Germany. Let's take a little listen to the Q&A session.
For you, firstly, trade seems to be the order of the day or the order of the week. What do you think about the prospects of a potential trade war between the US and the EU, and does that seem more or less likely since the start of the year? And secondly, I'd like to hear your reaction to Sweden ending its experiment with negative interest rates, and whether you think that markets, assuming you don't have the potential to cut further, and they're signaling that the next rate rise will be upwards rather than downwards, are they correct in that assumption?
So that's 3 questions in a row. Okay, on the trade front, I think you're quite right in signaling that trade is actually an important element in our considerations, and particularly in assessing the downside risk. think one critical development since our last meeting in late December has been the conclusion of phase 1 of the negotiations between US and China. And that in and of itself has a variety of consequences. It has consequences in relation to uncertainty. It certainly has slightly reduced, if not vanished, but it also has consequences in terms of international trade at large and indirect consequences for those regions or countries around the world from which trade will be diverted in order to deliver on that phase 1. So this is something that our teams are looking at very carefully to assess exactly what will be the impact on a net basis for the euro area. In terms of the trade relationship between the US and the EU, I took some comfort from the meeting that was concluded a couple of days ago between the President of the European Union Commission, Ursula von der Leyen, with the President of the United States. And while we all know that the results of those meetings are preliminary, the tone and the determination on both sides to draw positive conclusions from that meeting and to indicate determination to pursue the negotiations and the approach to the trade relationships between the EU and the US, I think is to be taken as a positive signal. I know that the President of the Commission will be visiting the United States in February. I would expect continued work to be ongoing between the parties by then, and hopefully some positive developments out of that February visit. But clearly we're going to monitor that very carefully and see what the signals are with due consideration for the limitation of signals relative to what the outcome of final negotiations can be. In relation to the setting of rates, in particular by Sweden, I think I'll leave it to the Swedish Central Bank and to Stephen Ingers to actually indicate on what ground, for what reason.
You were listening to Christine Lagarde, the ECB president in Frankfurt, Germany, as she begins the Q&A part of the session of the news conference, Tom. And I have to say, things feel a little bit sleepy at the moment in Frankfurt, Germany, but don't be fooled. They're going to get very interesting as the year progresses, specifically around this review of monetary policy and where they come down on the of negative interest rates.
And what is so important here, folks, is a news idea of I need news now, I need news now. If it's not now, it's boring, with the way so many pros look at it, which is to think of what I call the choice set that will be there in March, or in a shock in the summer, or into the autumn next year, particularly with the American election coming up, and frankly other elections, where she's preparing for the uncertainties that are out there.
I'm not surprised to hear the question come up about the Swedish central bank. We actually talked about that on Bloomberg Surveillance a number of weeks back. That we finally have a central bank that has experimented, shall we say, with negative interest rates in Europe. It is the Riksbank, it is Sweden, and now looking to do the opposite. Take them away and start to see what happens with the economy afterwards. And I find it an interesting case study, not just for the ECB, but for the Bank of Japan and the SNB as well.
What's great about this is to have economists that come to us from different paths and different walks of life. And almost invariably, folks, with all of our guests, particularly if they're younger, there's a research paper that leaps out. Our next guest, John, I want you to bring in Torsten here, but at Deutsche Bank, he wrote a series of papers on the American, not the German, the American housing market, where modern market economics just stopped to listen to what Torsten had to say.
Let's bring in Torsten Slok, shall we, from Deutsche Bank. Pleased to say he's actually here in Davos, Switzerland, so he can weigh in on some of the things we're hearing from Frankfurt, Germany. Torsten, your early take, please.
So she succeeded to not move markets with this statement and with her press conference so far. In some sense, in European language, she has kicked the ball into a corner kick. And the question is, how long time is it going to take now before the ball will be kicked into the field again? Of course, the whole issue is about the strategic review. And it still remains somewhat unclear what the strategic review exactly will be doing, but it's pretty clear also from her opening remarks that it all ends up being about inflation, both for the US and for the euro area. The conversation must be at the Fed and the ECB, why is inflation still so low? And if it is permanently lower, does that allow us, the ECB and at the Fed, to keep interest rates lower? So in some sense, the answer to her press conference here is stay tuned and let's see what comes out of the review.
Torsten, is this encouraging or worrying that we have two of the biggest, most important central banks on the planet, both doing this at the same time? Is it encouraging because they're going to do something about it, or worrying because they're actually looking at their inflation targets and realizing they can't hit them?
It's particularly worrying in the European case because negative interest rates was supposed to be temporary. This started in 2014. Now we are 5-6 years down the road. It doesn't look particularly temporary anymore. And I should just mention, Sweden has just realized that maybe the costs of negative interest rates are just too high. So overall, it's quite an experiment that is being run here. And overall, the fear, of course, that one can have is that what is the mission if it's not inflation targeting? Are we moving out to also talk about climate change, inequality? What will inflation targeting look like in the future? It does become very important for rate investors and further out the bond curve, of course.
Torsten, I've asked this question the last couple of days, but I don't believe I've asked it this morning. And I can do this with a foundation of Folkers, Landau, Hooper, Slock, Matthew Lazzetti economics, the quality of Deutsche Bank economics. Does your team see any evidence that any given central bank could, quote unquote, reflate an economy, can gather inflation and lift price change?
So at least they haven't succeeded since the financial crisis. Let's conclude that. And this is why the secular stagnation debate first came around, meaning that it was not just monetary policy, fiscal policy had to do something. Now Lagarde just a few minutes ago exactly said it would be welcome if fiscal policy did more. So in some sense, monetary policy has essentially run out of ammunition, and now we are both at the Fed and ECB thinking about, well, should we be changing our policy? Should we be changing our communication? And that all speaks for itself. To the answer to your question is that we just have not come to a point where we have been able to create inflation, and that is definitely a significant problem because inflation has been undershooting for so many years.
Torsten, for our audience who have followed the situation in the Federal Reserve, that review is still not complete, but it's pretty clear that some of the outcome of that review, even before it's finished, has already leaked into the reaction function of the Federal Reserve. Do you expect to see something similar happen with the ECB as this review gets underway?
It is actually relatively similar if you think about it. So Lagarde and the ECB, they have been talking about that they wanted a symmetric inflation target around 2, which is another way of saying they would allow inflation to overshoot 2. In the US, Jay Powell has been talking about average inflation targeting, which is a different way of saying the exact same thing, meaning that we're willing to allow overshooting. And for rates investors, if both the Fed and the ECB are saying we're going to allow more overshooting in inflation, the conclusion must be for bond investors across the board that they are saying that interest rates are going to stay lower for longer.
Torsten Slock, thank you so much. Here's with Deutsche Bank at Davos, and we should point out here with Mr. Saving as well. It's not appropriate, John, to speak to Torsten Block about, the executive and the leadership and the management challenges of Deutsche Bank. But I must admit, in speaking to Mr. Saving the other day, it just was good to see him here as the stock moves from €6 and nicely breaks out above €7. Still huge challenges.
We're all well aware of the struggles in Europe, the specific struggles to Deutsche Bank, but the broader struggles for the sector as they face, as Torsten pointed out, 5 years of negative interest rates. And President Draghi used to make the argument that rates need to be low now to be higher in the future. They've been low. They've been sub-zero for 5 years.
And that's got away. Forget about Madame Lagarde. We all understand her political position at the ECB. For the PhDs at the ECB, where's the research on that?
The research starts right now as the review gets underway. From Davos, Switzerland, for our audience worldwide with Tom Keene and Jonathan Ferro on Bloomberg Radio. Our coverage will continue with Lisa Abramovitz and, of course, Paul Sweeney as well. And then a little bit later, we'll be picking up with David Solomon of Goldman Sachs. Look out for that on Bloomberg Radio.
Hey y'all, Jeff Foxworthy.
At the Bank of Santander, they've created Stan, a smart bot that can predict the future of remortgaging.
All right, Stan, will my mortgage rate go up?
1955 was the last time Newcastle won the cup.
No, and try not to mumble.
Playing, let's get ready to rumble.
Oh.
Meanwhile, at Santander, they can't predict your future, but they'll help secure it with great mortgage rates fixed for up to 10 years. See what's possible at Santander.
Early repayment charges apply. Lending subject to status and criteria. Your home may be repossessed if you do not keep up repayments on your mortgage.
Keys. Check. Phone. Check. 70s playlist downloaded? Check. Nice. There's one more thing you should check before you leave. Your travel. There's a new cycleway under construction between Kensington Olympia and Brentford Town Centre, so expect delays due to lane closures at the junction of Kew Bridge Road and Chiswick High Road. Plan ahead at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip
Bayless. Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
Go courtside with the NBA on TuneIn. With the NBA on TuneIn, hear your favorite team and players take on their biggest rivals during the biggest games throughout the year, including regular season showdowns, the 2020 All-Star Game, and the NBA Finals in June, featuring the home and away calls for all 30 teams. Plus, with the NBA on demand, relive the best moments of the season by listening to the past games in their entirety. Listen to the NBA all season long on TuneIn.
This is not a commercial. This is a reminder. With TuneIn Premium, you could be listening to more music commercial-free. Get over 45 commercial-free music stations. Visit TuneIn.com/premium to upgrade.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards at the goal line. It's intercepted.
Listen live as the action unfolds, or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught. It is in for the right side for the touchdown to Keenan.
Search NFL today.
First time.
We always talk about the losers in a trade war.
You benefit if you're just further away from China.
So that you can too.
What are the ramifications if she crumbles or doesn't crumble?
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Surveillance Economics.
American economic power and future depends on trade deals.
In many of these countries, we're still seeing people struggling.
Finance.
We're in this vortex of uncertainty. These big companies, they just sometimes lack focus.
Investment.
The markets have become a little bit too addicted to the Fed.
Timing the market is just so difficult.
Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good Thursday morning from New York City to our worldwide audience. Paul Sweeney here in our Bloomberg Interactive Brokers studio. U.S. markets look for a softer opening as concerns over the coronavirus mount. Earnings season, of course, continues as Procter & Gamble reports weaker than expected results. Investors and strategists debate whether financial markets are approaching bubble territory. And Davos and the impeachment trial continue to make news. We will bring you the latest throughout the morning. Coming up in a few moments, we will bring you a discussion from Davos with David Solomon, Goldman Sachs Chief Executive Officer. But first, let's get the latest on pre-market stock activity with Bloomberg Stocks editor Dave Wilson. Dave, what are you looking at?
Well, since you mentioned the coronavirus, we might as well start there because you're seeing companies that own casinos
in the Chinese city of Macau take a hit, as they did earlier this week. Notably, Las Vegas Sands down 4% in early trading, and Wynn Resorts down 4.5%. And we've got to mention Tesla, if only because yesterday you saw the company above $100 billion in market value for the first time. It's pulled back today, lower by about 1% right now. At one point, it was flirting with that $100 billion figure. And UBS maintained a sell rating on Tesla, even though the firm more than doubled.
Wow.
Its 12-month share price estimate. It's now $400 and change, and you have a stock that at the moment is at $564 and change.
Wow.
So, in any case, moving to earnings, you've got Procter & Gamble shares down 2%. The household product maker's sales for the fiscal second quarter were lower than analysts' average estimate in a Bloomberg survey. P&G said it had market challenges in Hong Kong, India, and the UK. Travelers down 2.5%. CEO Alan Schnitzer said the insurer faces ongoing challenges, in his words, with lawsuits seeking bigger payouts on claims. The litigation hurt Travelers last year, though fourth quarter results were just as ahead of projections. Comcast down 2.5%.
I saw that.
Yeah, the media company shares initially rose in response to their fourth quarter results as earnings and revenue beat estimates. On a conference call, though, you have the company talking about higher video subscriber losses this year, how it's going to be tough to grow for the affiliate revenue of the NBC Universal network to grow. So some caution, shall we say, from Comcast. Union Pacific, though, up 1.5%. The railroad's fourth quarter profit and revenue almost matched estimates, even though the number of carloads fell 11%.
Wow.
General Electric's up 3%. Morgan Stanley raised its rating on the industrial company to the equivalent of buy from hold. The firm said GE looks like a budding turnaround rather than a business in financial distress. You've got Morgan Stanley also raising its rating to the equivalent of buy from hold in a couple of memory chip makers. One of them, Micron Technology, up about 2% in early trading, and the other, Western Digital, up 3%. Then there's Teradyne, up about 8.5%. The chip equipment maker's earnings and revenue for the fourth quarter were well above estimates, and Teradyne's first quarter profit forecast also topped projections. Citrix Systems up 3.5%. The maker of remote access software reported higher fourth quarter subscription revenue than analysts expected. L Brands up 4.5%. This company on the retailers Victoria's Secret and Bath and Body Works. And that stock was raised the equivalent of buy from sell at Barclays. PG&E's up 6%. The bankrupt California utility reached a settlement with PIMCO, Elliott Management, and other note holders over a proposed reorganization plan.
But they still have to get the governor to approve, right?
Yeah, and the governor, Gavin Newsom, just came out yesterday reiterating his opposition to the current deal. And we have to mention SLM, better known as Sallie Mae, the student lender, up 22%. SLM plans to sell $3 billion of loans to finance $600 million of stock buybacks.
Nice. Just what the creditors and the bondholders like to see. Issuing debt to buy back stock.
Well, in this case, they're actually selling loans on their books, so it's a little bit different.
Got it.
But nonetheless, I mean, it is something that is getting people's attention in early trading.
Bloomberg Stocks editor Dave Wilson, thanks so much. Let's head back over to Davos, Switzerland, not to Tom and John. They're probably getting ready for the slopes. But let's talk to Stephanie Flanders. Stephanie's the senior executive editor for Bloomberg Economics. Stephanie, thanks so much for joining us. Love to get your thoughts on kind of the feel of Davos this year. We started out the week, a lot of talk about sustainability, ESG. I just want to get your sense of kind of the feel for the optimism / pessimism kind of matrix there.
Yeah, I mean, there's always a lot of talk here at Davos about the sort of the big issues, the disruptions, business models being turned on their head. You're right that climate change has been a massive theme here. But it's interesting when people are just looking at the kind of short-term outlook for the global economy, which in other times might have been a much bigger focus. There is a feeling of optimism. I mean, even relative to a few months ago when we probably would have been talking about, potential for even a recession and we were worried about the state of global manufacturing. There's been a kind of building sense of optimism here, I sense, where people are kind of looking around thinking, hang on a minute, this doesn't look too bad. We're not sure about the long term, but this next 12 months, it feels like we've got a reprieve.
Well, last year we were talking a lot about trade wars, and one thing here is that President Trump framed the debate on trade by saying that he was now turning his attention to Europe. That got zero reaction in markets. Do we have a better sense of why people at Davos and beyond are not taking that seriously?
Well, it's interesting. I mean, I can remember being here in 2010 when they should have been taking Greece seriously, and they didn't. So Davos has not always been the most sharp-eyed about the threats coming down the track. But in this case, I can see why they would think, why would Donald Trump, having faced quite a lot of pressure to do that phase one deal with China, and was concerned about what it had done to financial market confidence and economic activity, why would he really do something damaging in opening another onslaught on Europe? I mean, he's still keeping it there. Steve Mnuchin here, the Treasury Secretary, kept the whole issue open around potential retaliation on autos and other things. But I think there is just a reluctance to take it seriously here, which potentially relates to what they think is the president's political calculation before the election. Could be turned out to be wrong, though. Often has been wrong.
Stephanie, what did you make of Christine Lagarde's comments this morning in Davos?
Well, they were she's not in Davos, remember, but
exactly.
Everyone was watching her. And actually there was a funny question where someone said, wouldn't you be in Davos? And she said, no, I think this is more important. But it was very kind of careful, rather long statement in her opening, I would say, relative to her predecessor. Obviously not that much to say in terms of the short-term monetary policy situation. The focus is all going to be, and we haven't got it yet, the details of that review of policy and the overall framework for the European Central Bank, which we're going to get after she sits down, basically just in a few minutes. But she was careful not to take sides in that debate in advance, although some journalists were trying to get her there. She was saying, I want to build a consensus, I have my views, but so do other members of the Governing Council. That's probably the takeaway for people.
Given the fact that they're going to give their strategic review, the ECB, the first since 2003, what are we expecting them to say with respect to inflation? I mean, that's been the big question.
Yeah, and there's always been that debate, right, that there was this sort of downward bias on the inflation target because it isn't just the sort of 2% inflation, and we try and stay one way or one side or the other of that. It was you have to be below and close to 2%, and even the close to was a change. So there had, Mario Draghi wanted it to be more symmetric, wanted it to be more like, in effect, the inflation target of the Federal Reserve and other places. That is still a debate within the Council. But one thing that she did when she came in was to make it much broader. We had felt this was a kind of a dovish review. She wanted to be very broad, which might mean less news for inflation.
Stephanie Flanders, thank you so much for joining us. We appreciate your comments from Davos, Switzerland. Stephanie Flanders, Senior Executive Editor for Bloomberg Economics. Just looking at the markets here, we're about 20 minutes before the cash open. We have the S&P down 4 points, Dow down 71, NASDAQ down 1. Looking at the Treasuries, up slightly. The 10-year bond is up 7/30 seconds, pushing that yield down to 1.74%. The 2 years at about 1.5%. So kind of a quiet opening, Lisa.
Yeah, certainly in the U.S. And beyond, although not necessarily in China. We're going to head back now to the World Economic Forum in Davos, Switzerland, for a special interview from our Bloomberg Surveillance co-host, Jonathan Farrow and Tom Keene. For that, we are joined by John right now. We join him for the Open on Bloomberg Radio and television from Davos, Switzerland. John, over to you.
Davos, Switzerland, for our audience worldwide. Alongside Tom Keene, I'm Jonathan Farrow. This is the countdown to the Open on Bloomberg TV and on Bloomberg Radio. I can confirm that in Frankfurt, Germany, there is an absolute snoozer of a news conference taking place.
And what's great is
President Christine Lagarde.
Everybody asking questions is asking 1, 2, 3 in a row. I don't know how she does it.
If you would like to follow that, you can on the Bloomberg terminal. If you are a Bloomberg subscriber, on Live Go. Get the price action around about 20 minutes out from the opening bell in set up as follows. The pain, the epicenter of all of it, is over in Asia. Chinese equity markets down and down hard. In the United States, barely any follow-through whatsoever. S&P 500 futures coming in just 0.1%. In the bond market, yields lower by 3 basis points, Tom. 174 is your yield on a US 10. Yeah.
What's interesting in all of our discussions here, and you learn this in Davos, and frankly, you learn it on the island of Manhattan as well, that each bank is different, each executive and set of executives at the banks are different, and of course, all different challenges. At Goldman Sachs, of course, the transition, and they've chosen a guy that used to move ice cream at Baskin-Robbins. This is important
Are you
training.
trying to cause trouble?
John, you don't understand
Straight
this.
in a
In
company
America, the coveted job in high school, younger high school.
Is that right?
You went to McDonald's, you went to the others. The glory job was Baskin-Robbins ice cream.
The ice cream
And
man?
that's how you moved ahead.
David Solomon, Goldman Sachs Chairman and CEO. Have you ever had an introduction like that before?
I've never. First of all, thank you for having me.
It's
But
great to have you here.
I've never had.
What was your favorite flavor?
My favorite flavor was Rocky Road.
Okay, there we go.
What was your favorite flavor?
An introduction
Pistachio.
Like that. Okay, I'm not taking part, guys. Central banks, the epicenter of the conversation today with the ECB in Frankfurt. For the Federal Reserve, real conversation about what is going on with the balance sheet, David. Would love your insight, just your take, your opinion. Is that QE or is that not QE? What is that?
So, the monetary policy that's been around and has been in place for a long time, obviously, has been an enormous stimulus. When we sit here today, and I kind of think about the path forward, I think we're now in a period this year after three mid-cycle cuts, for lack of a better term, that I don't expect a lot from the Fed in the context of this year. Obviously, the balance sheet's come down a lot over the course of the last couple of years. All of this supports or impacts liquidity in markets, and I think the Fed has done a reasonable job managing liquidity in markets, even with a speed bump back.
So I'll ask it again then. Is that QE as they start to buy T-bills and the balance sheet starts to expand again?
Anytime the Fed uses its resources to affect liquidity in some way, shape, or form, it's having an impact on markets. I'm not going to answer the question the way you're looking for me to answer it, because I don't think it's a black and white answer. You tell me what QE is.
No.
Well, we'll ask John Hotzius, we'll ask Bill Dudley, but the answer here is we get a lot of different opinions, including the former member of Goldman Sachs, really someone that drove your economics forward, Mr. Dudley of the New York Fed. We get all these different opinions, and what our audience wants to know is what you have learned from your pros on the desk of those reactions, the movements that you've seen in the short-term paper market. What have you actually observed in the market that gives you information about these balance sheet challenges?
Well, I think that everyone observed that the Fed had a very, very significant balance sheet investment, and it reduced that balance sheet. There have been a bunch of regulatory inputs to the amount of liquidity that banks need to hold as the regulations have changed. And at some point, you can reach a supply-demand where, for a variety of reasons, some of them can be idiosyncratic around a moment in time, maybe tax payments, that the supply-demand of liquidity changes and the price for short-term liquidity rises. And we saw that. The Fed responded appropriately by saying we want to make sure that there's enough liquidity in the system. I think all the banks also, I know we did, I can't speak for others, we positioned ourselves so at the end of the year, when we thought liquidity might be tight, we have liquidity to contribute to that.
Delicate question. Are you constrained by the new set of regulations? Are you happy with them, or do you need to see amendments so you do finance better?
No, we are an adapter to the regulatory framework. And so I think as an organization, we've adapted very well over the decade to the regulatory framework. And look, the regulatory framework continues to evolve. And so our job is to make sure we can serve our clients well, that we have the right resources, and we do not feel constrained to serve our clients well and run our business based on the regulatory framework.
We want your take on the markets and the price action we've seen over the last couple of months. The community, the investment community at the World Economic Forum, pretty polarized on what we're seeing at the moment. We've had a whole range of views. We had Guggenheim Scott Minerd say that it resembles some of the Ponzi scheme. We had Bob Prince of Bridgewater say that the boom-bust cycle as we know it is over. Where do you come down on those two extreme views?
Generally not a man of extremes. So I'd say that there will be booms and busts again at some point, although I don't see one anytime soon. And as I've been around talking to clients over the last few days, and that's one of the principal things I do while I'm here, I'd say I see and I hear what I'd call kind of a confident, middle-of-the-road view of the current economic environment. U.S. economy is in good shape. Manufacturing sector is a little bit soft. Capital spending has been lower than people would like to see, but the consumer is overcompensating for that. Europe, a little bit better. Headwinds of the phase one deal helps a little, but in the distribution of outcomes, overwhelming likely scenario is economy chugs along this year.
Well said, but the distributions of outcome, and I remember this from Mr. Varnier in August of 2007, you get a 3 standard or even 4.1 standard deviation moment. As Sachs, and for that matter, your view of global Wall Street, positioned better now, boom, bust, if we get that jump condition, that abrupt movement as we saw in August of 2007?
The banking system's positioned incredibly differently than it was positioned in 2007. There's been an enormous amount of leverage that's come out of the banking system. There's been a huge amount of equity that's gone into the banking system. I also think the risk management activities of the industry have improved materially. So there will be cycles, there will be events that stir markets. Generally, they repeat differently. So the last time there was a significant economic recession, it affected the banks significantly. I think the banks are in a different position. And when we do have, trouble in the years ahead, which at some point we will, there are a range of things we can see, but I think the banks will be